It's Tom's face on the kitty's ears. I don't know how anyone could appreciate that more than I am this moment, but it is very, very weird. I'm so glad that the market open is coming for us any moment now so that I can stop talking about Tom and the roaring kitty picture. But as you say, we're looking for a read-through from the NVIDIA story to the chip stocks in Europe this morning. Do we see it when we get to the market open? It is coming in just a moment, and here we are. So we have got the stock 600 currently higher 0.3%, the CAC 40 higher 0.2%, the DAX in Frankfurt higher 0.2%. And if we break it down by sector, you've got about 3/4 of them in positive territory. Utilities leading the gains this morning, higher 1.1%, but bottom of the basket is tech, down 1.3%. I promised you a look at the chip stocks in Europe. ASML Holdings higher 1.4% currently.
Yeah, it's interesting. And when we look at the stock 600 as well, as you see those loading, ASML looks like the biggest index contribution, actually.
Tech is now near the top, yeah, gaining 1.2%.
It's driving the market higher, which is interesting. It's coming off the NVIDIA story, but I also have to say, we were talking about this massive rise in the last 30 minutes of the U.S. session on Friday as well. Of course, that's going to be a high-volume trade as well. I'm curious how much of this is a catch-up to that, in addition to the NVIDIA story.
Or a combination of both, perhaps. Absolutely. Given that data seem to confirm that some work is being done for the Fed in terms of wages coming in a little softer, consumer as well seeming to pull back a little bit in the US, and of course the top line in terms of PCE or personal consumption expenditures, that inflation index that the Fed scrutinizes, coming in on a month-to-month basis lower than had been expected. So that all seems to feed into expectations that the Fed will cut this year. The question is how many, and we look across to the dot plot, of course. Travel and leisure, the sector, seems to be at the top of the list right now. Tech is up there, number 3, currently getting 1.3%. Retail also getting a bid. Looking at energy as well on the back of that decision by OPEC Plus, and it is complicated. Jumana Persechi has been breaking it down for us. Energy as a sector getting 1% on the news that OPEC Plus is extending these cuts, but is going to start to reduce the extent of those cuts from, I believe, October of this year.
Yeah, and I'm going to, as we talk about some of the individual movers, you talked about the sector space. One of the downside movers is Sanofi, and I think this is a story we haven't quite hit yet, but this is important when it comes to the spinoff that they have of their consumer unit. I think over the weekend, the likes of Goldman and Morgan Stanley now getting on part of that deal. This is potentially one of the biggest spinoffs in history when it comes to some of those European deals. Remember, this is the consumer healthcare space. So that is, of course, seeing a little bit of a drop this morning. But so, again, to your point, one of your only laggards in the entire sector.
Yeah, healthcare now bottom of the basket, but still up 0.3%. Every sector in the green now, and tech higher 1.3% as it stands. But travel and leisure leading gains up 1.4%. Must be the Guy Johnson effect over speaking to the airlines.
Yeah, pushing it higher, perhaps. Well, there's a lot to digest, and I think the commodity sector is quite interesting here. And really, the breadth you're seeing in the European market is fascinating, in addition to the UK market as well. Let's just get a little bit more insight here, because someone who's far more familiar with European equities joins us on set. Sam Unstead from our Markets Today blog. Sam, I want to go broad with you first, simply because it does feel like there's a very big market narrative at the moment, besides just a catch-up, perhaps, to the NVIDIA story. Is that how you're reading it?
Yeah, I think so. I think also, you know, we've had a couple of weeks where markets have drifted a little bit, and they've been glomming onto this, the rake story in particular. PCE data last week maybe took a little bit of the air out of that, and so that drift lower appears to be kind of slightly reversing, but not with any great catalyst. So it's hard to say whether that's going to go much further than it has in the last couple of days.
And Sam, I feel like not even British people were interested in the UK election last week. So of course, the Trump story dominating attention reaction, which is perhaps to Labour's benefit, actually, given its internal disruptions. But let me ask you about the UK market. Is it bothered about the election at this point?
Not yet, I would say. I think you're getting pockets of reaction within the market at the moment. So water utilities, for example, there's been quite a lot of political focus on them already. There's been a little bit of a drift lower in shares in even the listed companies beyond the turmoil around Thames Water. I think what we're waiting for now is the manifestos. Once you get the manifestos and you get a real clear idea, at the moment it's kind of piecemeal, so you're getting a question about the banking sector, a question about utilities, whatever it may be. Once that's all in one place, that's when you can get that real assessment of exactly what's going to happen. And at the moment, the fact is the most important one will be Labour's manifesto.
Mm-hmm. Do we get clarity? I mean, the ECB cuts on Thursday is the expectation. Is that a catalyst? I mean, that presumably is priced in to a fairly large extent across European stocks. How are markets? How are you and the team thinking about the ECB and the guidance that we're going to get?
Yeah, I think it has been priced in. Although it's taken quite a long time to price it in. So the ECB have been quite clear for quite a while now that June is very much in play, and in the last couple of weeks have effectively been saying we are going to cut in June. The markets have only really just got there. So, but when that happens, that kind of takes you to this next leg of the cycle, because there will actually be an actual rate cut. Assuming that they do indeed follow through. And so once that happens, this question again of divergence between the different banks will start to be raised again. I think you could see a little bit of movement, but I think it's really just rolling over into that next leg of the central bank story.
All right, Sam Munster from our Markets Today blog, giving us a little bit of a taste of what we're looking for on the macro front. You get more from him and the team on the front page of the Bloomberg UK website, or simply typing TLIV GO on the Bloomberg terminal. And in the meantime, let's look at a quick check on some of the heavyweights. Our European version is the Magnificent Seven. We've got the Sensational Six, all in positive territory. And of course, if you look at it from an index contribution level, ASML is driving the charge higher, almost 2% higher on the day. But then you got Schneider Electric as well. And Guy Johnson loves to remind us that even though that is a utility, there is an AI read-through here in terms of how they're able to really capitalize on that. So you can really see tech leading the charge higher, even Nestle higher by 0.7%, in line with some of that consumer stock rally that we've been seeing later. So that is your picture from a kind of larger mega cap standpoint. Let's get a check on some of the other individual stocks on the move. Joe Easton has that story. Joe?
So we have just got an opening price on GlaxoSmithKline. It's a big drop. We're down almost 9%. That has literally just opened because we had a delayed opening because it was such a big move. As we said in Stocks to Watch, they will face potentially 75,000 claims that the Zantac treatment caused cancer. That's after a Delaware judge said that they would have to go to trial. We're also seeing that weigh on Sanofi as well. There was, of course, the other story about the spin-off that you guys have been discussing, but Sanofi is also subject to a number of these claims as well. Both companies are saying that they will appeal the ruling, but that is by far the worst performing stock in the UK and I think in Europe as well. We're looking at some other pharma stocks though as well. AstraZeneca and Genmab, two of the companies that have had strong data out of the oncology conference that's going on in the US. We saw Citi calling Genmab higher. We are seeing that stock up almost 4%, and we are expecting to see some reaction on the Novartis and Roche drug data as well that's coming out in that conference. So we're keeping an eye on a number of those stocks, and we are seeing green pretty much across the board in that sector, giving that update today. Then in terms of your chips, all very exciting with the AI impact from NVIDIA that is going to change the world, according to the CEO, who has been speaking about a new industrial revolution in AI, and that is boosting all of those stocks, as we did expect pre-market. So we're seeing ASML, BE Semi, Ikestron, and a number of others gaining today. Then we're going to flip over to football. Critty is very excited about Kylian Mbappe moving club, but take a look at poor old Borussia Dortmund, down 7% after losing the Champions League final at the weekend. They were so close to getting a goal in the first half. They couldn't quite get it, and Real Madrid punished them. They miss out on 15 million euros worth of prize money because of that. They will actually get a bit of a bonus from the Jude Bellingham transfer, though that will take the edge off. But nonetheless, Borussia Dortmund down 8% following that loss at the weekend. Then we got a couple of morning calls to bring you. One of them in the UK, Financial St James's Place. JP Morgan likes this one. They say that a sell-off due to some regulatory changes around giving consumers fairer returns on their investments has gone too far. They upgrade to overweight, and that one gained 6%. But going the other way is Commerzbank. This one is in Germany. They get a downgrade because the fading interest rate rises will start to weigh on their net interest income, according to analysts at Citi. Commerzbank going the other way. That one's down 1.3% over in Germany this morning.
All right, Joe Easton from our equities team, we thank you for those movers. 8 minutes into the open, the stock 600 high at 0.9%. But coming up on the programme, we're going to go to Dubai to the IATA AGM. Guy Johnson is waiting in the wings for us with the CEO of Air France KLM. He'll give us his take on the state of the industry. That's next. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back now. The president of Emirates says Boeing is still years away from a rebound, a turnaround, following a string of bad news that ultimately, of course, led to a change in the CEO at that company. Tim Clark spoke to markets today. Anchor Guy Johnson at the IATA conference in Dubai.
If you ask me, this will be a 5-year hiatus starting from now. So I don't think they will recapture their production lines on all aircraft types. This is a challenge to them at the moment, given the pressures they're under. So I think one step at a time.
Okay, Tim Clark speaking to Guy Johnson, of course, on the ground at the IATA event in Dubai, where Guy is standing by now with another great guest. Guy.
Tom, thank you very much indeed. We are joined now by Ben Smith. He, of course, is the CEO of Air France KLM. There's only one subject to kick this interview off with, and that, of course, Ben, is the Olympics. They're about to start. Are you ready?
I think so. It's a once in a lifetime event, at least in France. Last time was over 100 years ago. Spending a lot of time preparing, even before I arrived at Air France KLM, which was 5.5 years ago. So I think it's going to be a great show. It's very exciting.
Everybody's very excited, but there are some concerns around queues at Charles de Gaulle. I talk to American friends, they say the queues are still fairly long there. There's concerns about what could happen potentially with strikes. The unions are still kind of rattling and potentially could cause problems. Are you confident that we're not going to see any problems emerging?
Well, we're not adding any more airplanes to our fleet for this summer. And most summers were well over 90% load factor. So in terms of number of customers that we're going to be flying through the two airports in Paris, CDG and Orly, not going to be an increased number of passengers. The flows will be different. We'll have less customers connecting and more customers originating or destined to Paris. But in terms of capacity and number of passengers, it should be about the same as last year.
Are people avoiding Paris? Are business travelers avoiding Paris during this period? Are you kind of seeing a different mix?
Definitely a different mix. We are seeing a reduction in the number of business customers coming in, but the summer, we always see that. This is right in the middle, end of July, early August. It's not a peak business period for us, but it is a lot of volume. So what we think and what we see is there's going to be a lot of pressure on the baggage systems because I've never seen so many inbound customers. Those are the types of things that are concerning us. But the airport authority, they've done what we see is a very good job of preparing.
Are you worried about the unions?
Well, in France, it's always a focus on organized labor. We have a good relationship with our 17 unions, and a lot of them are excited as well. But with labor law in France, you've always got to keep the relationships up. So
it can't be ruled out.
It can never be ruled out in France.
Okay. You talk about what is happening with demand. What does the demand picture look like right now?
For the summer, it's strong. Our airplanes will be full, from what we're foreseeing, and we'll see how pricing works out. But volume-wise, there should be no issue.
So you bring up pricing. Some of the low-cost carriers, Ryanair obviously is the example everybody's citing at the moment, talking about maybe softer pricing over the summer, softer fares over the summer. Any evidence that that's going to be a similar story for you?
Well, at Air France, we're a predominantly long-haul carrier.
Yep.
So we're not a low-cost carrier. We do have our low-cost carrier at Orly Airport. But as far as Air France goes, the traffic that we're seeing globally in all of our segments is holding up it's quite strong. Now, for Asia, we're still not back to where we were pre-pandemic. We've got this inability to fly over Russia, which makes us less competitive than Chinese or Indian carriers. So we've held back putting in capacity that we had at the same levels we had before the crisis. Transatlantic's good, Africa's good, South America's good. But I hear some of the discount carriers in intra-Europe are not able to reach some of the increases in yield that they were hoping for. We're seeing a little bit of that, but our Transavia unit is in growth mode, so we're not in steady state.
What is holding you back right now? It doesn't sound like it's demand. Is it the availability of aircraft? We've spent a lot of time already at this conference talking about what's happening with Boeing and what's happening with Pratt & Whitney. Is that where the challenge lies right now? Is it the availability of staff? Is it what you have to pay staff? Where is the challenge that is holding you back?
It's a little bit of all of that. I would say at the base, it's not the ability to source staff for pilots or for cabin crew. We've got issues on the maintenance side. A lot of our maintenance employees left the industry. A lot of competition to keep maintenance staff. In France, we have Airbus, we have Safran, we have Thales. So there's a lot of opportunities for mechanics. So that is an issue for us. Airplanes, on the wide body side, we have the airplanes we need. Maybe 1 or 2 months late, that's not the issue. But I would say it's getting the pilots in the right seat because there is a lot of training. It's complex with the union rules that we have. There's a little bits of things here and there. But we are, I would say, if you look at our capacity levels versus 2019, when you compare that to other European airlines, we're sort of at the top.
You talk about maybe a few aircraft being late. Are you holding on to any older aircraft for longer as a result of that?
A few. We have, we've got 180 wide-body airplanes in the group. we've got maybe 5 or 6 that we're holding back a little longer, not just to keep a little bit of a reserve, but also older airplanes that were missing parts, which is an issue from some of our suppliers. We've got at least some extra airplanes for backup. I mean, that's one of the things I can add to our list of issues and getting everything back to where we were. Is in the supply chain, we are having trouble sourcing parts for interior cabins, for engines, that type of thing.
Let's talk about what's happening in the consolidation story. You've talked in the past about it being a must in Europe. Doesn't it feel like the Commission kind of agrees with you that it's a must that we see consolidation amongst the European carriers? We're watching what's happening with ITA very carefully. It looks like Lufthansa is maybe struggling to get that deal over the line. Are you running the numbers on ITA? Would that be a fit, do you think, for Air France KLM were the Lufthansa deal to fall apart?
Well, I think we are totally for consolidation in Europe. And when I say consolidation, I mean consolidation to compete globally. I think Europe is the most competitive region from a intra-Europe or intra-region European perspective. I mean, there are so many low-cost carriers in Europe. There's no shortage of choice for consumers. Where I think the European Commission is focused on, which we think is wrong, is ensuring that European airlines can compete globally. We are, I believe, disadvantaged because we are not able to get the economies of scale or to be able to maintain a relevance compared to Gulf carriers, American carriers, and this is our concern. The focus that we believe is wrong. The focus should be, are any of these transactions going to diminish long-haul competitiveness, and we don't believe they will.
Just to come back to the ITA issue, I hear what you're saying about what the Commission's attitude is towards the approach they're taking, but are you still open-minded about any of these? We've got TAP, there's Air Europa, obviously Luis is pursuing what is happening there. You've got the partnership coming up with SAS. But are you still open-minded if, for instance, Carsten Spohr over at Lufthansa doesn't see that deal go through? Are you open-minded still about maybe pursuing some of the other options maybe you haven't looked at yet? Are you running the numbers on some of these other transactions?
Well, look, we run the numbers on any opportunity that we can see.
That includes ITA.
Could be financially accretive. Look, the former Alitalia or ITA, we had an investment in them twice.
Yeah.
KLM did, Air France KLM did. Neither one of them worked out. We looked at it a third time. It's a difficult market when you look at the 2 airports in Milan. You look at Rome. There's a lot of foreign competition in Milan. If there was a business case to be had, I think we would be pursuing it a lot harder. Now, for our friends or our competitors of Lufthansa, it's a different dynamic. They have a different presence in northern Italy.
Yeah.
The business case, I assume, I mean, we're not going to see the numbers. I assume is very different to our own.
It sounds like that's kind of still a no at this point. It would be a hard thing for you to get to work.
We walked away from it.
Yeah.
We did pursue SAS. We're very happy with how that's developing. It's exactly what we were expecting. We have a fantastic relationship with our partners who are co-investing with us, and we want to see that through. We don't want to take on too many things at the same time. As you brought up, there are going to be other opportunities in Europe. So we'll get SAS hopefully completed, and then we'll keep an eye out if there are any other interesting opportunities for us.
It would be a more logical transaction for you, do you think?
We'll see. I mean, the new government there, it was a big decision made that we were waiting for, and that was the decision to build a new airport.
Yep.
We'd like to know, what is the transition period going to look like? Will it be both airports remain open, or will the old airport, the existing airports, close? That's very important for any particular this type of transaction.
Ben, it's always great to catch up. Enjoy the Olympics. I know you're going to be at the opening ceremony. I'm sure that's going to be great. Absolutely fantastic. Ben Smith, the CEO of Air France KLM. The bell is ringing pretty. Back over to you.
Guy Johnson there with us. He said the CEO of Air France KLM, pushing him on what that consolidation may actually look like. He's a fan of it, but to what extent is he actually looking at that ITA deal? We'll bring you more headlines as we get them. Guy also spoke to the IATA Director General, Willie Walsh, who weighed in on the state of the consumer. Take a listen.
I don't think we've plateaued in terms of profitability or revenues. I think the issue for us is, we're we're still in the recovery phase from a financial point of view. There is more work to do, and I think there's good opportunity for the industry to move forward. We clearly have some challenges. Fuel costs remain stubbornly high. We're looking at a fuel bill of $291 billion, 31% of the cost base. That's higher than the normal, which we would normally sort of figure at around 27%. So we continue to see some issues there. But I think we're going in the right direction. Our industry is not one that is highly profitable in margin terms. So the best we've ever done was a 5% net margin in 2015 and 2017. So this year we're looking at 3.1%. So I think you can say there is further room for growth in the margin, but a lot of work that needs to be done.
What about further room for growth in demand?
The demand environment, I think, remains quite robust. You will hear comments from certain CEOs about slight softening in demand, particularly in the leisure markets. But I think demand, if we're realistic, is higher than we would have expected it to be. And the outlook in terms of certain markets which are still in recovery. So international travel from Asia is still recovering compared to where it was in 2019. And I think there is still scope for that to grow. Now, it's recovering slower than we had expected, principally because of the Chinese market in terms of international travel to and from China. But I think that's a timing issue, not a plateau. I think that market will continue to recover and get back towards 2019 figures, but it'll take a little bit longer than we had expected.
Okay, that was Markets Today anchor, of course, Guy Johnson, speaking to the IATA Director General Willie Walsh at the industry meeting in Dubai. From airlines to the drug makers right now, GSK here in the UK taking a big hit in the session right now, down a full 10% on the news that a Delaware court has ordered that this company and others must face trial over allegations that its heartburn drug Zantac causes cancer. Of course, those are still allegations. GSK says it will appeal the ruling. Citi saying this could open up GSK to about 70,000 cases and potentially up to $3 billion in terms of costs around litigation. So that's from GSK, currently down a full 10% in the session.
We've also had the latest Spanish manufacturing numbers. The PMI for May, a beat on the expectation. It's 52.6% was what analysts expected. 54 a reading is what we have got here. No movement really in the euro off the back of this. No movement really in terms of Spanish yields off the back of this either. So I wouldn't say it really moves the dial for the ECB, this number, but an interesting read on the economy. We'll get the Italian manufacturing PMI at 8:45 London time for May as well.
And that just builds on the idea of that fiscal story that we continue to see, at least on the periphery, which really builds that outperformance. And speaking of that fiscal story, let's get some live shots here out of Mexico City here. These are from the campaign headquarters of former Mexico City Mayor Claudia Sheinbaum, who is now winning on that landslide victory. You can see that celebration there that we're keeping an eye on. Remember, she is inheriting a legacy, really, off of AMLO of fiscal debt, violence as well, not to mention the Pemex story that feeds into this region and really the global oil story as well. But you can actually see that already they are celebrating that victory quite aggressively. Whether or not that's actually showing up in the currency is a different story. You did see the Mexican peso initially strengthen on the landslide victory, but then pair some of its loss. Remember, the approval rating of her predecessor was at a 60% higher than you saw in any of the other leaders around the world. But of course, hitting that term limit, creating that opening for her. How she handles her presidency, what that relationship with the United States looks like under either a Trump or Biden presidency is yet to be seen. Coming up, we return to the markets with Aberdeen's Ben Ritchie to walk us through this equity story. That conversation next. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure. We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people. It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We've been experiencing inflation for so long in general purpose computing. Now that we finally determined to accelerate, there's an enormous amount of captured loss that we can now regain. A great deal of captured, retained waste that we can now relieve out of the system, and that will translate into savings.
Okay, NVIDIA's CEO, of course, Jensen Huang, speaking in Taiwan on Sunday, talking about computational inflation, talking about the upgrade cycle as they look ahead, of course, to new products, new hardware and software coming through from NVIDIA and eyeing the products that are going to be hitting the shelves next year as well. At this point, let's bring in a broader look in terms of the markets, but start on the technology segment with Ben Ritchie, Head of Developed Market Equities at Aberdeen. Ben, how are you thinking then about this upgrade cycle from companies like NVIDIA and how you deploy capital around that? How potentially significant is the situation where every 12 months you get an upgrade from some of these big chip players?
Well, I think potentially it's very significant, and I think it's about trying to find the companies. I mean, many people describe NVIDIA as selling the shovels to the AI industry, and perhaps it's finding the sort of maybe the handle seller to NVIDIA or the other key components within that value chain that are going to be able to take advantage of that. And, you know, certainly when we look across Europe, there are some quite interesting plays on that. ASML, Bessie, you know, these are companies that are well positioned to help support and drive that. And they're going to be able to extract their fair share of value from that process as well.
And the valuation gap or the valuation story around some of those European names, do they make them more appealing versus some of their US counterparts? To what extent is the window open on their valuation story?
Well, I think it's all about delivery at the end of the day around these things. I mean, if you look at the multiples for a Bessie or for an ASML, they're not outrageous. And if the prospects which we expect to be delivered on the top line come through, then actually, you know, they could really look very, very good value indeed. I mean, particularly for something like Bessie, where you're in the early stages of changes in the packaging that they're offering, then potentially the growth opportunities longer term look really compelling. So, you know, it's not just about starting multiples, it's also about what the earnings growth is going to be.
And outside of tech, you prefer international equities over the US, if I'm not mistaken. Does that include the UK?
It does selectively, absolutely. I think it's very much the case when we look at it from a sort of standing back perspective, is 65% the right amount of your capital to put into one market? Can you not find great opportunities around the rest of the world? And if you look at how the US equities have performed, then a lot of that has come from a small number of companies. It's just well documented. But it perhaps says, well, actually, what you really are looking for is to cover off your risk on the NVIDIA. But what about the other 50%? Maybe that could be somewhere else. And we see, really attractive company level opportunities in lots of other markets.
But what I kind of wonder about the UK is it because it's cheap, or is it because of the fundamentals?
Well, I think it's always about the stock level opportunities. I think the connection between macro and micro tends to be pretty loose at the best of times. The classic would be China, phenomenal economic performance for many years, terrible stock market performance. So I wouldn't connect UK macro performance with UK micro stock performance, particularly given the exposure to overseas markets, which is 75% of revenues. But there are still some really attractive opportunities within the UK. And I think it's just saying don't completely overlook a market just because you don't like the macroeconomic picture. There are going to be lots of really attractive opportunities within the marketplace.
Let's talk about one of those opportunities or potential not. Where do you stand on the defense sector? We're going into European elections this weekend. That's, of course, a major topic here. Is this something that is factoring into your playbook?
It's a question we're getting asked more and more, and we have a big focus on sustainability across our book at Aberdeen. And so defence is a real live debate about how you're able to factor that into the footprint. And it's something, again, there is a sophistication to that debate today, which just wasn't there 12 or 18 months ago. The prospects for those companies look radically different today than they did in January 2022. Yeah. Companies like Kongsberg, BAE Systems, Thales, the opportunities are definitely there. I think from that sustainability perspective, we just want to make sure that those weapons systems and services end up in the hands of the right places. And I think, to be fair, those companies haven't always done a great job of making that happen. How
does that compare? I'm going to tie this two together. What kind of racks my mind, it confuses me almost, that we see these massive valuations in the tech space. You're seeing it this morning, for example. The NVIDIA read-through, as Tom was talking about earlier, the likes of ASML, SAP, et cetera, with still no real clarity on how that kind of turns around and when that return comes from an investor standpoint. And yet, when on the defense sector, there's an active manufacturing ramp up, and yet you're not seeing them trade at the same valuations as tech companies, even in Europe, let alone the United States.
Well, I think there's some degree about how sustained that's going to be. I guess, we've seen demand coming through. How long duration will that be? Will governments follow through on the spending commitments that they're made or that they might like to make? Again, I think there are, the fiscal realities of that they are quite tied into that government spending. If you speak to, perhaps I remember hearing Ben Wallace talk about that the UK needed to spend 3% of defence of GDP on defence just to make its existing kit work, and that's a 50% increase. Yeah. But whether it has that 100 basis points to actually spend is an entirely different question.
We were speaking to JP Morgan Private Bank earlier in the show, Zamzeef, and he was painting a pretty constructive picture of this global economy, saying that growth is actually starting to pick up. You've got central banks that are starting the process of cutting. The SNB is there. The ECB goes this week. And then, of course, we look to the Fed and the BOE. Maybe there's some divergence there. But this global economy, do you see the catalysts at play to keep this rally going?
Yeah, I think it's a finely balanced situation, I think, at the moment. I think you can certainly point to stability in economic growth. I think stability in European context is pretty good. We're starting to maybe see a bottoming in China, and we're seeing some good developments other places. I think you still, though, have to look to the risk in the US, which is that you do see that deceleration coming through with inflation higher that constrains policymakers in terms of interest rate cuts.
So stagflation in the US is a concern?
I think that's the biggest risk for market participants, for sure, because I think when you look outside of that, I think that scenario of discount rates coming down, inflation largely under control or moving in the right direction, and growth looking quite good. I think that cocktail looks pretty attractive across a lot of international markets. But there's no doubt that if we do see that sort of stagflationary development occur in the US, that's going to spook market participants across the board.
Do you want to just flesh out that view of China? Because you've mentioned it a few times. You had iron ore dropping on that China pessimism this morning. But, of course, the health of so many London-listed equities depends on the outlook for China.
I mean, China's a big driver for ex-US markets, absolutely. It's 15% of revenues for Europe. And again, I think it's important for sentiment for investors looking to put capital to work outside the United States. I mean, it's seen as such a big part of that market. I wouldn't want to get overly excited about the domestic picture in China, but we've certainly seen the economy perhaps bottoming. We're seeing more substantive policy actions from government. We're seeing less aggressive action towards their own companies under the Common Prosperity situation. And I guess geopolitical issues around Taiwan, perhaps that's maybe being pushed to the left. So a number of those big negatives are perhaps not as significant today as they have been. And I think it's really just looking for that stabilization that would be helpful, that would underpin investment outside the US.
Rate cuts are traditionally a tailwind for the equity market. Is the one that's expected this Thursday out of the ECB priced in? irrelevant? Where do you stand?
I think it's all about the direction of travel. I mean, we've already seen cuts in Sweden. We've seen cuts in Switzerland. We'll see the ECB cut this week, I'm sure.
Yeah.
I think it's about that dynamic. And can we set up a situation of interest rate differentials against the US, perhaps some currency weakening, perhaps that reduction in discount rate against the backdrop of stable economic outlook and decent earnings performance from companies? I think that is going to be a good cocktail for companies. So is that priced in? Probably not as it develops over the second half of the year.
But there's a concern, though, about whether or not this is a consecutive cut story, whether we go, say, a cut in June and then don't see one until September. How much of a difference does that make to the equity picture when you've got basically 3 months in between with no tailwind? What does that delay look like?
Well, I think it sort of depends on your time horizon, but I think the debate
on your
about...
time horizon, what do you think?
So with a sort of kind of 3 to 5 year view, I think you can just sit back and be relatively relaxed, that you have broadly, to some degree, an asymmetric setup where you're going to see a number of interest rate cuts. We don't know exactly how many. Interest rate increases seem extremely unlikely from where we are. I think that's a pretty good setup for investors, and whether it's 2 or 3 or 4, however many it might be this year, the direction and the trend, I think, is supportive.
You've touched on the tech sector, and you've touched a bit on your regional preference. In terms of your sector preference, then beyond tech, where does that lie, and what are you avoiding?
Yeah, I think we're always very sort of bottom-up, stock-led, but I think we still maintain something of a sort of pro-cyclical bias in our portfolio. It's really driven by where we see the best company-led opportunities. Sort of came into 23 with big overweights to consumer discretionary, industrials, financials, not so much to banks, but other parts within that space and tech. That was driven by stock-level opportunities and the earnings growth opportunities we saw there, rather than a top-down call. But that's kind of been the right place to be for the last 18 months, and we continue to see perhaps a little bit, as we've been talking about, a little bit more vigor, a little bit more confidence in the global economy that's made those places a decent spot to be.
Okay, Ben Ritchie, thank you very much indeed, Head of Developed Market Equities at Aberdeen, with a view there on maybe how to position in this market, and a little bit of cautionary note I sense from you in terms of the global economy, but so far a few of those elements in place to possibly keep things going, but with a note of caution maybe around the US. Coming up, as 370 million people prepare to vote in this week's European elections, we're going to get a preview of what is at stake. Stay with us. This is Bloomberg.
The linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have 2 assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
I think lots of it is at stake.
This election is the most important election since 1979.
What is at stake is the future of Europe.
I think there are a lot of other issues too, like migration, the Green Deal, the competitiveness of the EU. But I think Ukraine will be the defining issue.
I do think that every nationalist party and sovereignist party in Europe are going to score.
What we are facing right now, if there is, for example, a surge of the far right, that the whole European project is basically going to be put in question.
So key figures from the EU's biggest political groups there underlying what's at stake in this week's elections to the European Parliament. Far-right parties aiming to make big gains in these elections when they go to vote on Thursday. 370 million people eligible to go to the polls across 27 countries. And the man who's going to be across all of it for us is our Bloomberg radio anchor, my co-anchor on the radio, Stephen Carroll. Lovely to have you with us, Stephen. Look, over the weekend I was looking at that massive rally for Viktor Orban in Hungary. Then you had the S&P downgrading France's credit rating and Macron already trailing Marine Le Pen in the polls. Just talk to us about how big a force the right wing is going to be in these elections.
Well, this speaks to the dual nature of these elections, because on the one hand, people are voting for the 720 members of the European Parliament, those people that will help shape the political and policy direction of the European Union over the next 5 years. On the other hand, people are voting in 27 different countries, so they're also dealing with competing issues at a national level. So what we're looking at when we try to examine what we take away from this election is both what people want out of the European Union, but also in a lot of cases what people want in their own countries. These elections are often referred to as being second-order elections by political scientists because people vote on issues that are not necessarily the way they would vote in a national election. In France, you mentioned, for example, a big focus on how Emmanuel Macron's party performs. It's seen as a bit of a midterm election for him, a check on the performance of his party and his popularity, but that also feeds into then the performance of the far-right groups, which at a European level operate in two distinct groups, and a big focus will be able to see how those two groups perform in these elections and what that means for the policy direction going from here.
Well, speaking of the policy direction here, it's a no-brainer that it's Ukraine, of course, this defense ramp-up. But we just had so many guests on our show this morning say that defense ramp-up isn't something that the markets can really wrap their minds around because it just doesn't feel like there's enough budget for that. How does that affect the Ukraine story?
Well, it's a question of budget, but also a question of how the EU will decide to use its policy instruments to actually do something about it. It's important to remember that trying to get 27 countries to agree on anything is very difficult. And although the European Parliament has a co-decision power in forming EU law, ultimately a lot of the decision-making lies with the national governments. And when it comes to issues around defence, countries are very unwilling to try and cede that to a European level. So the issues that we should expect and what the major political parties in this election are promising is more action towards the defence industry, be it supporting production and ability to be able to ramp up production at a European level, inserting requirements that a certain amount of defence spending be done to purchase European-made defence facilities. There's already been $1.5 billion earmarked to work towards that. The need, according to the Internal Markets Commissioner Thierry Breton, is $100 billion is what he wants European countries to spend. The budget doesn't have that at the moment. They have to reallocate what's in the budget. That'll be part of the negotiations that happen after these elections. And the question of how much scale Europe can apply to this, given that it is an awful lot of money, that every country wants a piece of where that European budget goes, but they also have to make difficult choices about where to take it from.
So what are they fighting over? If there's no money to actually execute on this, What's the sticking point here?
Well, there is money, that's the thing, but it's a question of you having to make decisions. In the last Parliament, the big thing that we thought there wouldn't be a huge amount of spending on was health. The health budget was increased dramatically as part of the last budget negotiations. The question is, if you want to take money away from public health programmes, where do you put them to? Health isn't, under normal times, a huge expenditure level of the European Union. There's a question, too, about the next generation EU funds. This is part of the recovery fund that was built out of the pandemic. A lot of that money hasn't been spent. And if you're looking for more joint borrowing, for example, one of those always very tricky subjects at an EU level, it's a question of some countries, the so-called frugals, will be looking and saying, well, we haven't spent this other money that we've set aside for perhaps lots of reasons around it being difficult to access or is overly targeted to certain areas. So can they agree to reallocate those funds to something else? How do you do it? And then it feeds into the national playbooks as well. Certain countries want that money to be able to fund companies that are stronger in their own area.
So how does that debate change if we do get to this shift to the right that some are signalling on the back of this vote? Because you've got examples of Meloni in Italy who actually has, you could make the argument, moderated her views, her rhetoric, indeed her policies, precisely because she wants to get some of that budget. And then you've got the likes of the new Dutch leader, Geert Wilders, as well. A bit of moderation there as he puts that government together. But then the risks of Viktor Orban. So how do we think about the shift to right and whether or not these lawmakers are able and will adapt and maybe moderate or not? And to what extent that could be a sticking block as well, or at least a stumbling block maybe for the Union.
And thus you've perfectly outlined how European politics works.
Right.
Essentially, when we have the results of this election,
I think you did that.
Then we set, but look, this is what happens, is you set the ship on a course and then you decide afterwards who the captain's going to be. And the first big vote is going to be, does Ursula von der Leyen, as she is seeking, get a second term as Commission President? The polls currently tell us that's quite likely, but who does she need to get into her coalition to get elected, because you have to be voted in by an absolute majority of the European Parliament. The last time around, she only had a majority of 9, and that's despite the fact that actually if you put together the parties in her coalition, she had a much larger number than that, but it's a secret ballot, so not everyone in those political groupings will necessarily vote for the candidate that they're supposed to. So that's part of the horse trading that will go on behind the scenes. It's really controversial at the moment to see if Ursula von der Leyen and her EPP party will do business with the European Conservatives and Reformists, who are one of those hard right groups. The Socialists, who are part of the governing coalition, aren't happy about that. Renew, the centrist party, aren't terribly happy about it either. This is all what starts after these elections, and we know the makeup of the Parliament, where the direction goes next, what political direction that these policymakers want to set the EU in the direction of, and what that means in terms of who they do business with, who they try to deal with, and what support they try to win. And key concessions. The other thing to watch out for is a lot of these parties elected at a national level may switch allegiance after the elections in their European parties. There's a big debate over Viktor Orban's party and whether they will remember where they'll go, essentially, because they're not really seen as welcome in the EPP anymore. So who do they sign up to next? There's big splits within the far-right and hard-right groups as well. There could be some reshuffling in those groups too. I mean, we saw the AfD in Germany being expelled from the ID group, the group that Marine Le Pen's National Rally Party are part of as well. Part of this shifting political sands in Europe will be determined by how many MEPs these groups get, how they perform, and then the question of what sort of horse trading is done within those groups to say, you come over to my side and we might be able to do business.
Well, speaking of that horse trading, there was speculation about whether there'd be a top job for Mario Draghi, which brings me on to the ECB, because of course we are expecting a rate cut on Thursday to coincide with all of this voting. Pricing for a September cut fully priced now. How does that interact with the politics, the monetary story that's also happening in Europe?
It's interesting because we haven't seen the same necessarily political nods that we've talked about a lot in the UK about how, you know, a Bank of England rate cut now is off the table because of the proximity to an election. It's not factored into so many of the decisions here, partly because of the fact that of course, the European Central Bank is only the monetary policy maker for 20 of the 27 EU member states that use the euro. But the question, I suppose, more broadly is around the future of the European economy. Certainly, interest rates coming down would be welcome. Nobody between, you know, Thursday when that rate cut's happened and the 4 days over which voting is happening is going to see their mortgage costs come down, and they're going to suddenly think, oh, now I'm going to be more likely to vote for X or Y party in the European elections. This is something that has, I suppose, a longer-term impact. It does point to an improvement in the European economy, but as is the story for decades now in the euro area and across the European Union, we're talking about relatively tepid growth. And one of the other big challenges going to be facing the next Parliament, the next Commission, is going to be how to try and reinvigorate that growth. Where do you leverage the European money? Where do you put it? How do you try and compete with the massive subsidies that are coming from the United States under the Inflation Reduction Act, or, of course, from China as well? It makes for a very difficult political landscape, but that theme of Ukraine is key to all of that. That's the one issue in all of the interviews that we've done in the run-up to these elections that every policymaker has talked about, the key nature of that, both from a big picture question of, the future of Europe, but also that key issue of where the defence industry goes now.
OK, Bloomberg Radio anchor Stephen Carroll with an encyclopedic take there on what to be thinking about leading up to that EU vote. Your comprehensive guide coming through from Stephen Carroll. Stephen, thank you very much indeed. Staying on the story of Europe, we're getting some data coming through from Italy in terms of manufacturing PMI. Slightly softer than the April number, 45.6. In fact, for April versus 45.6 versus 47.3 in April. So 45.6 is the May number versus 47.3. So it's a softening in terms of manufacturing. Of course, 50 is the line between expansion and contraction. So firmly in contractionary territory over in Italy when it comes to manufacturing. Euro dollar largely unchanged, currently at 108 on the single currency. Let's get back to the markets today. Anchor Guy Johnson now in Dubai at the IATA conference. Guys, some really interesting lines that you've been teasing out of your guests. And I know you've got a number of CEOs and executives still on the docket who you're going to be speaking to. What kind of has stood out to you in terms of where this industry is as it grapples with some of these supply chain issues?
It's not demand constrained. That is the takeaway. I think that is coming through loud and clear from the delegates here at IATA, which is interesting because there was a scare a few days back, Tom, when American came out and changed its guidance really quite significantly. That seems to be an isolated incident. Most of the people we're talking to here certainly seem to be of the idea that actually the consumer is still relatively strong, business spending is still relatively strong. Yes, I know we saw the data coming out of the States Friday indicating that maybe the consumer's retrenching a little bit. That certainly doesn't seem to be showing up in the aviation sector right now. The issue largely is one around what is happening with the supply side. Issues at Boeing, issues at Pratt & Whitney. We've just been hearing from Ben Smith at Air France KLM talking about the fact that he's struggling to get the parts he needs to fix the airplanes to make sure that they continue to fly. So there's definitely a kind of supply side story which is still a big issue right now. It's a manufacturing story. You just brought us the manufacturing data out of Italy. So there is that story that is loud and clear right now, pretty much with everybody we're talking to. But the demand side is really, really strong. And the question is, how much longer does this continue for? And that's a really pressing issue right here in the Gulf right now. How cyclical are we seeing this industry being going forward? Are we going to see a downturn coming through? Is this the right moment maybe to IPO some of these big Gulf carriers, particularly at a time when we are seeing the financial markets really beginning to move into a higher gear here in this region? It's a question that I posed to Tim Clark. I have to say, to Tim Clark over at Emirates, taking a maybe more cautious stance when it comes to that opportunity for an IPO. But Etihad, many people are speculating in this region as to whether or not Etihad up in Abu Dhabi could be the first off the block in terms of the major carriers here to go to market. So I caught up with the CEO. We did it in the last hour on this program, talking about this very issue. This is what he had to say.
Never an end game, right? It's just another source for us to raise capital. I mean, the mandate that we have from the shareholder is very, very clear, right? Run this company like you're running a company that is listed, that is a public company.
So you're ready for an IPO. So you're already in position.
We're working very hard to make it happen whenever is the time.
And Guy, your day is not over. You still have a busy day ahead. In our last 30 seconds here, walk us through your lineup.
So we've got Shai Weiss coming up from Virgin Atlantic. He tells me he's got some news he's going to break with us in terms of new routes that they're going to be running. He's also got some interesting ideas about Heathrow. We're going to be speaking to the CEO of Pegasus out of Turkey, a low-cost carrier competing with the likes of Ryanair. What kind of demand are they going to see over the summer as well? And we're going to be catching up with Scott Kirby. He is the CEO of United Airlines. We're catching up with him a little bit later on in the day. So we've got plenty more people to talk to right here at the IATA AGM. Guys, back to you.
Guy Johnson there on the ground. Of course, like he said, plenty more coming up in the next couple of hours. Not the only thing we're watching on our radar. Lizzie's going to Frankfurt for the ECB coverage. Tom and Anna will be manning the studio. I'll be in Berlin with Danny Berger covering Super Return. There's plenty of coverage in the days ahead. You do not want to miss it. Just some of a taste of the lineup we're going to get on this show. Lots going on, lots market moving. More ahead. Don't go anywhere. The Pulse is up next. I think that's with me. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show. This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. And market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London, in for Francine Lacqua with the conversations that matter. Here's what's coming up on today's program. NVIDIA announcing its next generation of AI accelerator chips, vowing to upgrade its technology every year. GSK shares dropping by the most in almost 2 years after a U.S. court ruling said it would allow jury trials in its Zantac case. Plus, CEOs and regulators of the world's largest airlines gathering at the IATA AGM in Dubai. We are live on the ground with the latest on supply chain issues and the demand story. In the meantime, a quick check on the European markets here because it is broadly higher. Is this a catch-up trade that we are seeing from over in the States? Remember, you had that last 30-minute rally in the S&P 500 on Friday, but then also the NVIDIA story. Your best performing sector this morning, at least in European trade, is the tech story, and that's going to be crucial. We'll dive into the details in a little bit, but you can see that is a story that is really bleeding into almost every single country, every major market that you are seeing in the European session. In the meantime, a quick check on these cross-asset stories because because like I said, it is green on the screen. When you look at the stock 600, you see a move higher by 0.3%, pairing some of its initial gains, but still nothing really to scoff at. Some of that green on the screen also bleeding into the American session. I'm going through all the regions of the world. The American session flat at the moment, 52.96. How much of that is paring back what you saw on Friday? Meanwhile, in the currency space, euro dollar 108.38. We have that crucial ECB meeting that we have on Thursday. Cuts basically priced in. Is that doing anything to the currency? We're going to dive into the details throughout the hour. And of course, Brent crude slightly stronger, nothing to write home about, but again, did have that initial drop coming off of the OPEC meeting over the weekend, really talking about those cuts. Let's go a little bit more micro, zoom in just a little bit more as well, because there's a couple of stocks you want to keep on your radar. NVIDIA is one of them, higher by a whopping 2.4%. Remember over the weekend, Jensen Huang talking about releasing more AI accelerators every year, really increasing that design cycle, similar, at least to me, to what Apple used to do, releasing a new iPhone every single year as it was ramping up some of its production stories. So now they're talking about releasing a new one in 2025 and a next-gen platform called Rubin in 2026. Those shares higher by about 2.3%. A quick check on AMD as well. Advanced Micro Devices, one that usually trades in sympathy with NVIDIA, this morning is taking a little bit of a pullback, down about 0.2%. But again, how much of this is simply some sort of opportunity cost between NVIDIA and AMD? Again, is it going to catch up then as we start to see a little bit more volume in the U.S. session? Right now, trading at about $167, we'll call it. Meanwhile, healthcare getting a lot of attention this morning. GSK and Pfizer are two that we've got our eye on. But first, GSK down about 9.4% after a Delaware court over in the States said that they're now going to be introducing jury trials into this court case as Zantac could potentially cause cancer. At least those are the allegations that are now being argued out in court. But the idea that there are now jury trials and real people affected as part of this court case, down by 9.4% in the stock. Sanofi as well, down 1.7%. And finally, let's talk about GameStop here, because that seems to be the retail trade that we continue to see. Pfizer as well, down about 0.6%, like I said, but GameStop higher by 85%, a whopping 85%. This coming after Keith Gill, also known as Roaring Kitty, Post showed a $116 million bet. Does that retail trade then pair as we get a little bit more institutional volume at the beginning, or as the beginning of the U.S. Open is really what we want to call it? I've wrapped a ton of stories. Let's see what's on the top of our minds when it comes to the investor base. Charlotte Ryland, as I think the proxy of that investor base, head of investments over at CCLA Investment Management, joins me this morning. Charlotte, I feel like every time I'm on the show, I have the pleasure of your company, and I'm thrilled to have it. Our audience just got a ton of information from me. What's standing out to you this week?
Well, I think, as you say, I mean, NVIDIA continues to be the story of the market. It was the story of the market last year as well. I mean, I think it's up sort of over 600%, but earnings actually have been following that way as well. It's not really a re-rating story. It's very much about that earnings coming through. As you say, they had a successful launch of the Blackwell product, and they're talking about the next product coming up. So, I mean, one of the worries about the market would be, was there going to be this air pocket between products? But it seems at the moment they're managing that quite well, and there continues to be very strong demand for these chips.
And that, of course, is strength at the moment, does then become a weakness in the future. That's something to be discussed in a couple of years' time. But Charlotte, I'm curious about this NVIDIA story. That it's a short squeeze. It's a momentum trade as much as it is a fundamentally driven trade as well. When does the party stop?
Yeah, and of course that's the great debate. And so far it's been sort of right to stick with it. I mean, I suppose, where could those air pockets come from? It could be the product cycle and a pause. It could be that the big spenders, the Amazons, the Alphabets, the Microsofts of this world say, actually, we've spent billions on this already. We need to be spending on other parts of our business. Maybe they pull back on that CapEx a little bit. I don't think so far it's going to be a competing product. It seems like this is absolutely the ecosystem that people are going for. Or it could be just, we just can't build endless data centers. Power is one of the things that people have been talking about, and how you power these things. You can't just build millions of them.
But that's a fundamental story. Is there a liquidity story here as well? I mean, given that the hyperscalers are driving 45% of NVIDIA's story, to me that feels like the cash sitting on the balance sheets of Apple, Microsoft, Amazon has really just been transferred to NVIDIA.
Yeah, but so far they've managed to keep margins going, and they've made cuts in other parts of their business. And these are businesses which probably had quite a lot of fat to cut anyway. But at some point, probably, yes, they are going to have to invest in other bits of their business, and that might be where you get that pause from.
Talk to us about this bond market then. When we connect the dots of the stock market and the bond market, I'm old enough to remember a time when yields were jumping, they were getting higher, and every single tick higher created some sort of sell-off in the stock market, and that affected the heavy techs that were really affected by that discount rate. That doesn't seem to be the case. That relationship doesn't seem to be as strong as it once was, say, 2-3 years ago. Do we see some sort of revamp in this higher for longer rates environment?
And I think, the market's sort of come to accept that we are at higher rates. And if you look at things like the utilities or the real estate sector, certainly that's being priced in terms of the higher discount rates. I suppose what's happening with tech is that you're still producing very strong earnings growth. And so that's sort of outweighing what you're seeing. I mean, we did see, back in 2021, there's a lot of froth in terms of the zero profit tech. That stuff has never really come back. But where you're talking about established players like Microsoft, which have great margins, and great growth, they can withstand that sort of higher discount rate.
It's interesting. When we're talking then about the Federal Reserve and where they're getting this higher for longer rates narrative from, it's stemming from the consumer resilience story over in the States. But then if you look at the data, there are pieces where we're starting to see a little bit of a slowdown. Markets, to me, at least for me, Markets 101 is the markets, especially the stock markets, pricing something in 6 to 9 months later. Why is it so sensitive then to every retroactive data point?
Yeah, I mean, I suppose the market still seems to be sort of grappling with, is inflation going to be bigger than they thought? Is growth going to be slower than they thought? I think probably the reality is that we've got yields up to a more sensible level. We spent a decade with them being artificially suppressed at incredibly low levels. Now they're more sensible, where they should be. Is inflation going to drop dramatically or expand dramatically from here? Again, probably not. So maybe not going to have huge moves in interest rates, and actually maybe bonds will stay roughly where they are today.
More sensible levels. So are you going by the historical norm then? I mean, we've had 2 decades of these very low rates, and I think a lot of people have been saying, look, where is the ceiling in these yields? And talking about a 10-year at potentially 5% before it heads down to 3%. Now we're talking more about a floor in yields. What is that floor in your view?
Yeah, I mean, I think we probably don't think it falls much below sort of 3.5%, 3%. Because, I mean, if you think about, you've got an inflation rate of 2, you add in a bit of a sort of real gap on that, maybe link that to GDP, you're probably getting out to sort of 3.5%, 4% anyway. So,
over what time frame?
Over the 10 years or whatever. But, I mean, it's...
Come on, Charlotte. That's the easy way out.
Exactly. Look, I'm much better at picking out equities than I am telling you where the bond yield's going to go.
That's fair. All right, well, let's go back to the equity story then. When we're talking then about this defense sector, this seems to be the story, at least in Europe, where every star is starting to see this rearmament. In our last couple of hours of programming, we had guest after guest saying, yes, this is absolutely a political story. You're seeing this massive political momentum for rearming Europe in particular, especially in the face of a potential Trump 2.0. It's not showing up in the equity market on either side of the Atlantic. I'm curious why that is.
I mean, I think in terms of defence stocks, they've certainly done pretty well already. And I think you're right. That's going to have to be, particularly from Europe, where we haven't really spent particularly heavily. We have relied very much on the US. And, we probably are going to have to sort of push up that spending in what is going to be a more volatile world. I mean, we've got Ukraine and Russia, but we've also got, of course, the situation with China and the tensions that are emerging there. I mean, the market, again, flip-flops in terms of whether it worries about geopolitical risk or whether it thinks it is not an issue. And for the moment, it seems to be calm about it. If you see something happen in Taiwan, say, that would be the moment where everybody would get themselves worried again.
But there seems to be, and this is what I'm trying to rack my brain around, is there seems to be a fundamental narrative, of course. Geopolitical tensions are high, where we're talking about 2 wars in this region as well, rearmament stories, etc. There seems to be a more clear return on investment, and I don't mean to make as gruesome of a connection here, because, of course, it is a tragic story that war is on the rise. But from a defense perspective, they're still not rallying. The stocks aren't rallying to the same extent to, say, your NVIDIA's, for example, even though the return on NVIDIA is still a couple years out. This is all kind of still momentum at the moment.
Well, I think in NVIDIA there is real earnings coming through and there is real margin improvements coming through. I suppose for the defense companies, the problem is always, these are very long projects. There's lots of changes that go on through the projects as they sort of develop the new products and the new weapons or whatever it is that they're spending on. Government budgets are not flush. There's a lot of demands on those government budgets, and perhaps that's where that lack of confidence has come from.
All right, Charlotte Ryland, Head of Investments at CCLA Investment Management, joining me this morning. We thank you so much. Coming up on the program, we're going a little bit more macro here. OPEC Plus extending some of their cuts, but laying out plans to bring those barrels back. We're live in Riyadh next. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Laptop, your future PC will become an AI. They'll be constantly helping you, assisting you in the background. The PC will also run applications that are enhanced by AI. And your PC will also host applications with digital humans that are AIs.
NVIDIA CEO Jensen Huang speaking in Taipei on how embedded he thinks AI will become. And look, the market's heard his message loud and clear. There is still plenty more demand to come, plenty more products to come from NVIDIA. Those shares higher by 2.3% in the pre-market. As we see more traders hit their desk, it's likely to increase when we see that volume. Remember, they are talking about a new product in 2025, that Blackwell Ultra chip, and then a next-gen platform in 2026. Advanced Micro Devices getting some of the love as well, higher by 1.4%. They're announcing their future of AI chips and will speed the rollout of those new models as well. There is a race to the top here, especially between those two companies. And that is the tech story. We have plenty in healthcare as well. GSK shares have slumped in the wake of a court ruling that the UK drug maker, alongside others, including Sanofi, must face trials over whether the former heartburn treatment Zantac causes cancer. Joining me now from our equities team, Joe Easton, all over the story. Joe?
So we are seeing a big drop in GlaxoSmithKline shares, as you say, Critty, down around 9% here in London. That is the biggest drop in 2 years for that stock, and by far the biggest decliner on the stock 600 this morning. We're also seeing some weakness in Sanofi as well, another marketer of the Zantac anti-acid treatment that you mentioned in the intro there. Now, we'll just remind you some of the details. This Delaware court ruling over the weekend says that the companies will have to face around 75,000 claims that Zantac caused cancer among users. Now, Delaware, of course, is important given its long-standing jurisdiction and guidance for other courts across the US. Now, Zantac was said to cause the cancerous effects according to these cases. However, recently we did see a judge in Florida rejecting this, and that actually spurred some hope that this wouldn't actually be ruled on by the Delaware court. So that is why the market's seeing it as a bit of a shock today. Analysts at Deutsche Bank describing it as a massive curveball. Meanwhile, analysts over at Bloomberg Intelligence saying there could be up to $4 billion in claims related to this. And we're going to bring up the GSK share price on the screen. We have seen a bit of a recovery in that stock. Back in 2022, we saw it plunge as news of these cases emerged. It's since recovered following that Florida ruling. But as I say, this is a bit of a shock for that stock today. And we're seeing lots of traders getting out of that one. The volume surging at the open of trading as well. The other one to keep an eye on is Pfizer in the US pre-market, another company that marketed Zantac, seeing some very small movements lower in that stock, but as such, not too much in terms of the volume on that one at the moment. Down 0.2%, but the biggest move, of course, in GSK with that 9% decline, the biggest fall in 2 years for that company in London.
All right, Joe Easton from our equities team, we thank you so much. In the meantime, we did tech, we did healthcare. Let's get a quick check on those oil stocks as well. Remember, the commodity story has been leading the stock 600 lately, and that's going to be something that we watch very, very closely. Your BPs, your Totals, your Shells, all trading higher this morning off of course, even though you don't see as much volatility in the underlying commodity. Brent crude trading at an 81 handle. This coming off of OPEC Plus setting out a plan to restore some production as early as October, despite concerns over the demand outlook and robust supply from beyond the group. Let's bring in Bloomberg's Horizons anchor, Jumana Bercecci, joining us from Riyadh. Jumana, walk us through the logic of this weekend.
Yeah, well, I think the starting point over here, Kriti, is that there was a lot of complexity already in place about the extent of the production curbs that had already been introduced by OPEC. And let me just break down what I think the highlights are. At a group level, these OPEC plus production cuts are going to stay in place until the end of 2025. So we got that clarification. But the other big question for the market is what was going to happen to those voluntary cuts. Those are the ones introduced in November 2023, not by all member states, only by 8 OPEC countries. And many of those countries actually were represented here in Riyadh yesterday. They physically came for the meeting. And what we found out is that those voluntary curbs are only going to be extended for another 3 months until the end of the third quarter of 2024, after which they will gradually start to get phased out. So that was initially a bit of a bearish surprise to the market, namely because essentially OPEC were signaling that they're ready to start putting barrels of oil back into the market once again. However, the caveat here, Kriti, is that they also have added subject to market conditions, which tells you that OPEC, as ever, are very keen on supporting this market, but at the same time satisfying many of the member states within OPEC who'd been calling for bigger production capacities. And one of the big winners actually was the UAE. They managed to carve out more production for themselves. They're going to increase production by 300,000 throughout the course of 2025. So they're treading a fine line here. They want to satisfy some of the countries within OPEC who've been calling to boost production and gain some market share. But at the same time, as ever, they do want to keep a lid on prices. And I think the price action this morning is pretty telling, because at the end of the day, oil price hasn't moved that much, even though they're signaling that more barrels are coming by the end of this year.
And of course, the plan's going into next year as well. A lot to digest there. Connect the equity picture for us as well, because Aramco also had a $12 billion stake sell out just hours after the deal opened. Why does that matter? Why do we care?
Yes, so Aramco, this is their secondary share offering, and as we know, the IPO was the largest in the world, happened in December 2019. They raised $30 billion at the time. So this book opened, and they're looking to raise $12 billion over by the time the books actually closed. But what became apparent is that there was very, very strong demand, even in the first couple of hours of them launching the process. A lot of that, you have to think, because it was a Sunday, has been met from some of the international, some of the regional and domestic players. But now the book building process is continuing through the international community. And we've written a story this morning. Our colleagues on the ground, Matthew Martin, alongside the team, have written a story about how Aramco are actually in London this week. The CEO, Amin Nasser, is there. His CFO is there, meeting with international investors to help shore up interest in the secondary offering. And the key here, Kriti, is whether or not the international community will get involved. Back at the IPO, it was only 23% allocation to foreigners. The question is, will they be enticed by this higher dividend yield that Aramco are promising?
Certainly something we're watching very, very closely. Bloomberg's Jumana Bercecci joining us out of Riyadh after the OPEC Plus meeting. We thank you so much. Coming up on the program, we continue our tour around the world as 370 million people prepare to vote in this week's European elections. We're going to walk you through what's at stake. Stick with us. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities.
Could face bigger challenges in his election.
Was going to keep reading World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
I think lots of it is at stake.
This election is the most important election since 1979.
What is at stake is the future of Europe. I think there are a lot of other issues too, like migration, the Green Deal, the competitiveness of the EU. But I think Ukraine will be the defining issue.
I do think that every nationalist party and sovereignist party in Europe are going to score.
What we are facing right now, if there is, for example, a surge of the far right, that the whole European project is basically going to be put in question.
Key figures from the EU's biggest political groups underlying what's at stake in this week's elections to the European Parliament. Far-right parties aiming to make big gains in those elections when voting opens on Thursday. Let's get more of Bloomberg's Oliver Crook standing by in Berlin. Ollie, walk us through what the polls are telling us.
Yeah, Kriti, the voting starts on Thursday. It goes through Sunday. It's going to be all countries of the 27 members of the EU. And what we're seeing, largely speaking, is that the center will hold. The center-right is going to get the most votes. The EPP, that's Ursula von der Leyen's party, coming in second will be the Socialists, again, with the two biggest blocs. But where we're going to see a lot of motion is more around the side of the Greens and the Liberal parties, Macron's party and the Greens, who are going to lose some speed. The Greens are really going to come under intense pressure in the benefit of these right parties. The ECR, Giorgia Meloni's party, and the far right, the ID group that used to hold the AfD here in Germany, and Marine Le Pen's story. And the question is, how is this going to actually affect the policy of Europe going forward? Broadly speaking, you could see a massive shift from all of this sort of focus on green energy, a lot of money that was put aside to that going towards things more like defense spending, where there is a lot more consensus within the EU. Where it gets interesting on defense is that we speak often of the support for Ukraine and support for defense build out in the same breath. That may not be the case under some of these far-right parties.
Certainly something we're keeping an eye on. Bloomberg's Oliver Crook reporting out of Berlin. We thank you so much. Coming up on the program, we are back in Dubai at the IATA AGM. Guy Johnson on location with the CEO of Pegasus Airlines, getting her thoughts on her state of the industry. That conversation next. This is Bloomberg.
The names that move markets are on Bloomberg.
Our
worried are you about the U.S. election?
It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions.
NVIDIA announces its next generation of AI accelerator chips and vows to upgrade their technology every year. GSK shares dropping by the most in almost 2 years after a U.S. court ruling said it would allow jury trials in its Zantac case. Plus, CEOs and regulators of the world's largest airlines meeting at the IATA AGM in Dubai were live on the ground with the latest on supply chain issues and the demand story. Good morning and welcome to The Pulse. I'm Preeti Gupta in London. We want to kick it off by talking about some of the pre-market movers in the U.S. because already you are getting quite a few. GlaxoSmithKline down a whopping 9.4%. GSK, of course, Sanofi as well down 1.2%. A lot of that in reaction to that Delaware court case suggesting that they're going to bring jury trials in on the allegations that Zantac did indeed cause cancer. So you are seeing a pretty big drop in the healthcare space as well. So that's one sector we're watching in addition to tech as well. Aviation is another. Like I said, a fairly broad rally that you are seeing kind of emerge in the stock market, at least on this side of the Atlantic. Airlines, a pretty decent chunk of that as well. So you can see going across the continent, you are seeing some green on the screen. Plus, of course, the chief executive of Air France, KLM, saying sourcing parts for aircrafts has been one of the main supply chain issues. CEO Ben Smith spoke to Guy Johnson at the IATA conference in Dubai.
We've got 180 wide-body airplanes in the group. We've got maybe 5 or 6 that we're holding back a little longer, not just to keep a little bit of a reserve, but also older airplanes that were missing parts, which is an issue from some of our suppliers. We've got at least some extra airplanes for backup. I mean, that's one of the things I can add to our list of issues and getting everything back to where we were. Is in the supply chain, we are having trouble sourcing parts for interior cabins, for engines, that type of thing.
Now over to the man of the morning, I will say, Guy Johnson, joining us from Dubai with another guest. Guy, over to you.
Freddie, thank you very much indeed. Let's pick up on that issue of what is happening with the availability of aircraft, what's happening with the supply chains, the availability of parts. Basically, what is happening out in the aviation world is if you're a Boeing customer, you are struggling to get the aircraft because Boeing can't deliver the aircraft that maybe you want. If you're an Airbus customer, then maybe things are a little tricky as well. If you are a Pratt & Whitney customer, an Airbus customer, you are not getting the engines you want, and as a result of which you're facing some of the similar challenges. However, On the A320 family, the narrow-body family from Airbus, there are engine choices. Some went with the Pratt & Whitney aircraft engine. Others went with the CFM engine. One of those that went with the latter, which is not experiencing problems, is the Turkish low-cost carrier Pegasus. Güliz Öztürk is the CEO of that business, and she's sitting right next to me. Good afternoon.
Good afternoon.
Nice to see you again.
It's a pleasure for me.
Look, here we are. We're coming into the summer season. Some of your competitors can't get the aircraft they want. The engines that they bought, if they're Pratt & Whitney, aren't on their aeroplane, so they can't fly them. You don't have that problem. You've got an Airbus fleet that is a CFM fleet as well. You're going to have that capacity on this summer. How big an advantage is that?
Yeah, that's true. I mean, that was the decision taken back in 2012 when we had placed the order of, at that time, 100 aircraft for Airbus Neos, and then we placed another 50 by July last year. So it's in total 150 aircraft for Airbus. And also, at that time, the decision was taken to get the CFM LEAP-1A engines. We were the launch customer guy at that time when we had given this decision. So right now, in terms of engines, we do not have that problem, which the peers or the industry is facing. In terms of aircraft delivery, of course, we face some delays, but which are manageable, I have to say. I mean, it's like several weeks for that. So for an airline, which actually plans its capacity, it's all its sales strategy, a year, maybe more than ago. So delivering the aircraft on time and without grounding it or grounding it unexpectedly is a big pain. So we're in an advantageous situation, I have to say, looking into the summer.
So are you able to keep the capacity on? Are you therefore able to take advantage of what is happening in the market? What does the market look like this summer?
Let me just give an overview of the first 4 months. For the first 4 months, in terms of demand and capacity growth, we had grown our capacity about 23% vis-a-vis last year, 4 months. And then we took passenger growth of 27%. So this is a strong demand, again, for this year. And looking into the forward bookings, we see this demand continuing. So I'm optimistic that our capacity in hand, which is planned already, we're having 16 aircraft this year from Airbus adding into our fleet, and the demand is there. So we are in a right shape for this summer.
Michael O'Leary is talking about fares being maybe a little softer over at Ryanair than he anticipated. Are you seeing that?
Yes, in a way, because right after the COVID in 2022, we had a revenge travel mood of the customers. So what we are putting on the table as an additional frequency or a capacity, they bought it whatever the price is. Now, by mid-23, we're facing that the pricing environment is getting to its normals. So I have to say that pricing environment is not as strong as 2022, but being an LCC, we're there. Going back to our, going back to our basics. That the customer is after for the lowest, most affordable fare.
You're not flying to Israel right now. Do you think you'll fly to Israel this year?
No, we don't fly to Israel since 10th of October last year. And this year we have taken out all flights to Israel until the end of this year.
And you put that capacity elsewhere?
We put that capacity elsewhere to some European destinations, some new destinations in Middle East, and adding new frequencies to the current destinations.
What would it take you to put those flights back on into Israel? Do we need to see a peace deal?
I mean, it's very difficult to make a projection from where we stand right now, but last year we were expecting to start maybe by the mid of this year, but now we have replaced all Israel capacity, which is about 2.5% of our total capacity, into the other destinations and now on their own sale.
Talk to me about what happens next. You have taken a lot of Airbus aircraft recently. You have a mixed fleet, though. Many low-cost carriers operate a single-source fleet. You go with Boeing or you go with Airbus. Are you thinking about going in that direction, i.e. you become an all-Airbus fleet, for instance?
Guy, the issue is this. Now, we are running 105 aircraft right now. 10 of them is Boeing. and those Boeings are with the fleet. Why? Because once the COVID is over, we have seen this demand, and we have to meet this demand with the capacity growth, and that comes with the aircraft. But there are lots of supply chain issues, delivery delays. So this was simply to keep those aircraft to meet the demand of the customer. So normally we would take them out of the fleet by the end of next year. So we now prolong that period, and we will keep the Boeing. And since we are 50 aircraft running back in 2016, we managed to run dual fleet, and we are the low-cost operator globally. I mean, our low CASK, cost per ASK, is the lowest last year globally, so we can manage that, and we want to keep it to meet the demand.
But the ultimate objective is to phase those aircraft out.
The ultimate plan is to be the single aircraft.
So you're aiming to be an all-Airbus fleet?
Yeah, and 80% of it is Airbus now.
So are you looking at ordering new aircraft, and presumably, therefore, you would be ordering new Airbus?
We will be. I cannot say it's so sharp, because until the end of 2029, yes, that's true, we will be getting another 64 Airbuses into our fleet, and they will be all Airbus 321s. Beyond 2029, we have to work on a new order. If when we see the demand here, we want to grow the capacity.
When would you have to place that order?
I mean, in the coming time, like
next
months. I mean,
So
that depends on our analysis and study.
But it's still a live competition between Airbus and Boeing?
Yeah, that's also, of course, the opportunities are there, yes.
Right, so you could still go back to a mixed fleet, is what you're saying?
That's something that I cannot say right now, because if I say it right now, that will be a decision before all these analyses and the studies.
But I guess the question I'm really asking is, you won't rule that out? You still want to have that competition between Airbus and Boeing?
I think nobody can rule that out, yeah.
It's great to see you. Thanks for stopping by to see us. As ever, always a pleasure. Thank you very much indeed. Gülhan Öztürk, the CEO of Pegasus. Kriti, back to you.
Guy Johnson there on the ground in Dubai with the CEO of Pegasus Airlines, talking about some of those capacity issues still ahead. We'll have plenty more conversations around those very issues from top voices at the IATA AGM. Guy's going to be speaking to the CEOs of Virgin Atlantic and United Airlines later today. Conversations you do not want to miss. Now, coming up on the program, stocks, bonds, and the rupee surge as Narendra Modi looks set to win a decisive majority in India for the third time. We're live from New Delhi for the latest. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
Europeans are heading to the polls to decide the makeup of the EU Parliament. On the ballot, economic growth and industrial policy, migration, and the geopolitical challenges facing the bloc. Stick with Bloomberg as we bring you the latest election updates from across the continent and analysis about what it means for the region and beyond. Tune in all week for continuing coverage leading up to the election results on June 10th. On Bloomberg Television, context changes everything.
The conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. Let's get a little bit of election coverage here. India's stocks surging to a record while the rupee and sovereign bonds climbed after exit polls signaled an emphatic victory for Prime Minister Narendra Modi's ruling party. Let's get the latest from New Delhi. Bloomberg's Menika Doshi live on the scene. Menika, walk us through the takeaways here. Of course, market reaction taking it very, very positively.
That's right. We're having a record day in India's markets today, as you pointed out, Kriti, and that's because the exit polls that were released over the weekend suggested that Prime Minister Modi's government will return and not just get past the halfway mark of 272 seats, but in fact, the average of the exit polls puts his government at about 365 seats. That exceeds what his party had won in the previous elections in 2019. What investors are reading into this is, of course, continuity. It's a word you're going to hear very frequently over the next few days here from India if those exit poll results do prove to be true. But they're also looking at a government that has been fiscally conservative, that has held the economy in reasonably good shape through the course of the pandemic and thereafter, that's invested heavily in infrastructure and is pushing hard for foreign companies to come to India and invest in manufacturing. If all of that gets doubled down on over the course of the next 5 years, then that bodes well for the Indian economy, which just closed FY24 at about 8% in terms of GDP growth.
And in terms of policy, if Narendra Modi is indeed selected for his third term, as the polls suggest, what does that mean? It feels like infrastructure spending is, of course, a major one, but what else are we looking for?
Well, Kriti, this has been a supply-side-led government or an investment-led government for the last 2 or 3 years. This has been a one-pony trick government as well. The big boost to the economy has been government spending. What we need in India to pick up is consumption, especially rural consumption, private investment, which has been stuck at a moderate level for the last couple of years, but most importantly, jobs. So whatever the government focuses on over the next 100 to 200 days will have to center around fixing these concerns. Though they have scored well on other regards, these are the concerns that continue to be central to the economy. And this is what we hope to hear from a new government, whether that's Narendra Modi's government or a different one, as we will find out tomorrow when the votes are in fact actually counted.
All right, Bloomberg's Menika Doshi bringing us that update live out of New Delhi. We thank you so much. And she said those key words, continuity, and that seems to be one of the things that are actually helping markets in India. They're not necessarily helping markets in South Africa. The ANC has begun talks with rivals to form a government after its worst election performance since 1994. Now, the rand is a little bit stronger this morning as investors digest the results. Joining me now, Bloomberg's Jennifer Sabasacha giving us a little bit more context. Jen, as we speak, we are getting headlines here out of Moody's saying that the vote outcome may bring policy uncertainty and that coalition could complicate policy execution. That's the view out of Moody's. Talk to us about how significant of a blow this was for the ANC.
Right, Kriti, I think Moody's is reflecting the sentiment of a lot of people right now because we really are in this sort of fork in the road. As you mentioned, of course, this is the first time the ANC in 30 years has suffered such a humiliating, as some people are calling it, blow. But the big question really and the focus is who now is the ANC, potentially the ruling party ANC, going to work with? Now, if we take a look at the parties that came just after it in terms of their support, there's the main opposition party, the Democratic Alliance, that you can see there. And the real story is what became the third biggest party, which is former President Jacob Zuma's party, the MK party. And the question is, what are the potential coalitions going to look like? What is a coalition going to look like in order to continue this continuity, as you were mentioning, Kriti, because that is really what investors want to see here, and that is what this economy needs. But if we look at some of the policies of some of these parties that are up there right now, they're pretty far apart. So that is why these these negotiations that are happening now are going to be key to pay attention to.
That's certainly something we're going to be watching very, very closely. A quick check on what the investors watching this, though, are. I mean, what are they most sensitive to when it comes to, now that we have this coalition story, are we expecting a little bit more, centrist views, nationalization? What is the market going to be sensitive to?
I think that is why we are, seeing the reaction right now in terms of the rand you mentioned, Kriti, and the expectation is that we could continue to see some volatility and the rand really potentially bearing the brunt of the uncertainty because of this. Now, just from an investor perspective, going into this election, the favorable outcome was potentially the ruling party teaming up with the DA, which is seen as more market-friendly, more pro-business, and there is some hope potentially that is where the ruling party will decide to go. But of course, there is historical disagreements between these two parties. So if not that, would there be another party come in, some of the more extreme leftist parties, as you were mentioning, Kriti, who have demands not just for nationalization you were mentioning there, that are things that they've been talking about on the campaign trail, but also the MK party has asked for the President Cyril Ramaphosa, to step down if they are to form a coalition. And so I think just with the investor sentiment, as we're watching what is happening right now in the markets, people are trying to interpret maybe where these discussions can go and really who or which parties are going to need to make concessions in order to form this government. And there's only 2 weeks that they have, Kriti. So we should just brace ourselves for more volatility, I think, in the near term.
More volatility, that, of course, showing up, and even the bonds providing the juiciest yield in all of the EM world right now, of course, accounting for that volatility and that geopolitical risk. Bloomberg's Jennifer Sabasaja, we thank you so much for breaking that down for our global audience. And speaking of that juicy yield, that's where a lot of investors, EM investors especially, go to Mexico, where Claudia Sheinbaum is set to become Mexico's first female president in a landslide victory. 3 exit polls projecting the former mayor of the nation's capital and candidate for the ruling Morena party won between 55 and 63% of votes. Now, the coalition of opposition parties that had ruled the country for nearly 90 years is seen to be winning between a quarter and a third of votes cast. Now, off of that, you are seeing some weakness in the Mexican peso. Again, that story of continuity that both Jen and Menica were talking about in various other parts of the world, very much applying to the Mexico story as well. Now, coming up on the program, we go back to the G10. S&P has downgraded France, citing the government's missed goals to restrain the budget deficit. We're going to dive into the details next. This is Bloomberg.
fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Of course, a story that's catching our eye on both sides of the Atlantic is going to be GameStop shares trading by a higher over 80% in the pre-market story. This coming in the context of Roaring Kitty, otherwise known as Keith Gill, posting a position on Reddit for $116 million that would allow him, basically through call options, to buy the shares at about $20 a share. Now, you can see since he's done that, GameStop now trading at about $42 a share. But just for some context, he's never really posted on social media in recent years. And so to see that kind of revelation really pushes the retail bid up that are getting involved in the get-go. We'll, of course, see if the institutional bid remains as we go into the U.S. Open. But for now, GameStop, again, really making itself known higher by almost over 80% in just the pre-market. That's an equity story we're going to be watching alongside some of the other favorites of meme stocks, Bed Bath & Beyond, for example, among various others. I want to get back to the macro story here, where when we're talking on both sides of the Atlantic about the fiscal situation, debt comes up over and over again. It's also proving to be the Achilles heel over in France, where the S&P has downgraded the country's sovereign debt rating from AA to AA minus. Now, the ratings agency is saying that the French government has missed its goal to rein in the budget deficit, which is set to remain above 3% of GDP in 2027. Let's bring in Bloomberg's William Horobin joining us out of Paris. William, this is something that Bruno Le Maire was quite confident about, that he could get that budget deficit down below 3% in 2027. Is this just the S&P, the credit rating agency, saying, we don't believe you?
Yeah, the big problem here for Bruno Le Maire and the French government is that they missed their budget deficit reduction targets by quite a large margin last year. Because there was disappointing tax receipts, growth was much weaker than expected, and it's just become a very difficult situation to imagine being able to get to this sort of holy grail of 3% budget deficit by 2027, which is the end of President Emmanuel Macron's second term. And so that would require sort of unprecedented levels of spending cuts, and we're in a country that hasn't balanced the budget since the 1970s. So S&P's decision was essentially that they're not going to make it, and debt is going to continue rising over that horizon.
Yeah, William, and as we speak about that, I mean, you're looking at the euro, which of course is responding more to the inflation data than anything. You're not even seeing that much of a reaction in the bond market or even in the CDS market as well. Bloomberg's William Horobin joining out of Paris for a little bit more context. Now, that does it for me. Up next, Bloomberg Brief with Danny Berger and Manus Cranny, in New York. They're going to walk you through, of course, the pre-market stories. They've got their eyes on GameStop, NVIDIA, and, of course, all the drama on this side of the Atlantic as New York wakes up. Stick with us. This is Bloomberg.
what are you most worried about in the global economy now? Is it the geopolitical environment, U.S.-China, Ukraine? Is it inability to pass the debt limit extension? What are you most worried about?
I think most of the time, I would answer the same way, a financial crisis. As a human, I worry a lot about the Chinese invading Taiwan and World War III coming on. But in that case, I don't think whether you invest with David Rubenstein or Cliff Asness is the really big issue. So I think a financial crisis I worry about because they're very unpredictable. After the fact, everyone predicted them. But before the fact, they're not very predictable. I don't think anyone wants a financial crisis. You think you'll do well, and something happens that boomerangs, and you don't.
Well, as we talk, we've seen Silicon Valley Bank basically go under and have to be bought. And there are other banks that have some challenges. Are you worried about a banking crisis or not so much?
Worried enough to put it on my worry list. I have no special knowledge of banks, commercial real estate and banks that deal in that, maybe a more nerve-wracking place, how that shakes out in cities. So, yeah, those things worry me, but not especially more. I think even before SVB, I would have said financial crisis is a very low probability. When someone says their biggest worry, doesn't mean they think it's likely. It means they think it's possible and would be terrible.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Crenny alongside Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
The AI race heats up. NVIDIA unveils plans for annual chip upgrades. AMD, meanwhile, speeds up the launch of new processors. Sold out, Aramco's $12 billion stock offering meets a wall of demand. Executives hit the road to court foreign buyers this week. And we are live from the Dubai IATA meeting. We're going to bring you our exclusive interview with Virgin Atlantic CEO Shai Weiss. Happy Monday, Manus.
Happy Monday, Danny. Yeah, it was a beautiful weekend. The sun was shining. What is not to love? The sunshine was out. The rain is bad. But there was a bargain hunt on Friday. The last 20 minutes, it was like the last 20 minutes of a Black Friday sale in the S&P 500. Stocks managed to rally into the close. We have a couple of nuances this morning. We're up an eighth of 1%. I love GameStop. I love this story. We've added $6.5 billion in market cap. It was $7 billion at one juncture. Of course, GameStop, part of the meme frenzy. Keith Gill, we understand, on Reddit has intimated that he bought 5 million GameStop. We need to verify that. We'll talk more about that a little bit later on. One other stock for you to track, GlaxoSmithKline. GSK plunges, the drug maker, facing Zantac cases in Delaware. So it is to appeal a ruling that says doesn't determine liability. So looking at a potential $3 billion liability for Glaxo, we'll keep an eye on that stock. Yields, we're counting down to non-farm payrolls this week. Savings rated the lowest in 16 months, Danny. And Kashkari says we can extend for a period of time. They've agreed at OPEC Plus to extend the cuts to the end of the third quarter, and then there will be a unraveling of a series of cuts. We will talk more about that through the hour. And the UAE gets a 300,000 barrel kicker for next year.
This week should be an interesting one because we've seen in this market stuff that's usually tier 2 data. We can react off of it. We can react off of consumer confidence that we usually don't care too much about. But what do we get this week? As you mentioned, we get jobs, we get the ECB, we also get ISM manufacturing and services. After PCE maybe lulled us into the sense that inflation is coming down, it could get spicy this week, man.
Yeah, I mean, that lowest PCE reading was something that helped the bond market. But if you look at, I mean, I like the way you say it's tier 2 data. We're rolling up to tier 1 data on Friday. I'll trade anywhere, tier 1, tier 2. But we roll straight through to Friday, and of course it is about the jobs report, and some of it sticks in the head on a Monday, and some of it doesn't. 222,000 is what we're looking for on the payrolls, and 4% unemployment. So I think you're right, the tier 2 will set us up with a batting average into the Friday delivery on the jobs report.
Yeah, it's this unknowingness that makes us react so much. We want to know what's happening with this economy. It is confusing. Let's get over to Pooja Kumra, head of European rate strategy at TD Bank, to help us solve the mystery. Pooja, a lot of stuff happening this week. What do you think has the potential to shake things up the most?
Hello, good morning to you. So again, as you said, lots of focus when it comes to central banks or data as well as the labor market report. I think key for us will be ECB committing to their rate cut that they have actually pre-announced pretty well. BOC on Wednesday as well, whether they actually go for the cut. And actually, you know, this week we will actually see that theme of divergence between Fed as well as the other central banks to be more prominent. And I think that's what will be key for markets. And ultimately, it's the Friday payroll, which would be key driver for rates markets.
Pooja, good morning. You talk about divergence. What will be, use your crystal ball, the scale of divergence by the close of this year between the Fed and the ECB? What will the scale of divergence be by the end of the year between the ECB and the Fed? And does that put a floor on euro-dollar?
So when it comes to Fed, I mean, we expect Fed to cut rates by 50 basis points. When it comes to ECB, the economy is actually faring pretty well. So we are looking for 75 basis points in cuts. So in both the cases, we are looking for more cuts than what is being priced by market. I think at this stage, what we are seeing that no market can actually diverge that much when it comes to rates, because 10-year yields will be anchored by how treasuries actually perform. But if we see financial conditions tightening just because of Fed not cutting rates, I think that will require both ECB, BOE, BOEC to actually do more, because they do not want financial conditions to tighten too much. I mean, growth data in Europe has been improving, but still we are looking at growth which is sub 1% versus US, which is basically around 2.5% when it comes to trend growth.
Wait, so Pooja, can I just clarify? So if we have a Fed that you say isn't cutting, and that means we're seeing some tightening, it means the ECB will have to cut more because they don't want that undue tightness? Is that what you're saying?
Yes, I think, again, I think there are two components when it comes to policy. One is looking at euro-dollar. I think euro-dollar is basically priced for basically Fed not cutting that much. Next is via the financial conditions. And I think financial conditions in Europe have started tightening in the recent sessions, with bonds actually trading at 2.6%. So I don't think that ECB wants to sound overly hawkish. They are data dependent, but I don't see them actually be just not cutting rates, just given the fact that the recent inflation data was much higher than what markets were going in for.
So a lot of people in the market are trying to understand the cadence, the process of cutting. One cut in June, and there is a theory out there that then the ECB waits until the early part of the autumn, maybe September, October, before they cut again. Is that sequence something that you think it will take hold? Because you believe that Lagarde is fundamentally dovish.
I think ECB as a team is much more dovish as compared to the other committees. But yes, I think quarterly cuts make more sense right now, just because growth has actually recovered as what ECB was expecting. If we were in March this time, the kind of data we were getting in March, I would have said that ECB would need to do June and July consecutively, just because one rate cut does not change the financial conditions, the dynamics for the economy. But right now, ECB, Euro area, both are in a better place to have much more optionality. And that's why it makes more sense for them to cut next in September. That being said, I don't think on Thursday they will be ruling out the July case of cuts. I think they want to keep all optionality open right now.
Pooja, to that point, part of that optionality arose because we've had some hotter inflation readings. You had wages in the euro area come in 4.7%, matching a record that was previously set. You had CPI for many regions, Germany especially concerning, last week also come in hotter. I know you said some of the tightness is coming from the US, you have more optionality, but couldn't I also argue that is fundamental? It is a more sticky inflation in Europe than perhaps we first thought?
No, I mean, I clearly agree with you, but the numbers that we saw this month were also driven by one-off factors. So I know ECB will actually keep that in mind, but in general, we are seeing deflationary impact across European inflation numbers. So I think, in theory, we are getting towards core as well as HICP to actually be at 2% in the near term. And I think that's what ECB's forecast will also reflect in Thursday, that they are still seeing headline inflation to be at 2% by end of 2025. So as long as they see that trajectory, I don't think that they need to sound overly hawkish. I don't think that has changed.
We are going to get a snapshot of the employment situation here in the United States on Friday on wages. Non-farm payroll is expected to come in 222,000. But then we look at what Kashkari has been saying over the weekend. And again, really pushing this extension of time. They have time on their side. My best guess, this is what he said in the FT, my best guess is that we would leave rates here for an extended period of time until we get a lot more data to convince us one way or the other. Is the underlying inflation really on the way down? Post-PCE, what is your fundamental assessment? I mean, they're still playing for more time and extensively more time, and yet the PCE was the lowest so far this year. And disinflation is reaffirmed, if not necessarily reestablished with pace, but it is reaffirmed.
Yes, no, I agree. I mean, like last week's PCE was definitely a big relief for markets. We've actually broken from that 0.4 level that we have seen for the first 3 months. To us, they still need the CPI, core CPI, to be around 0.1 to 0.2, and that is going to be a slow drag. We do feel that they could see these numbers as soon as September, and that's where they will be ready to cut rates. But I think next, and that's what even markets are pricing right now. I do feel where we are standing in terms of rates, we will be more reactive to any weak data. For example, for payroll, we are looking for a below consensus number, i.e. another reading to come below the 200K number. I think that would again help that rally to come in and actually keep September live as well.
Okay. Keeping it live, keeping all the options on the table. Pooja, thank you so much for joining us this morning. Pooja Kumra of TD Bank. Other stories trending on your Bloomberg terminal this Monday morning. What have we got for you? Donald Trump has joined TikTok, the Chinese-owned platform he tried to ban in the US. It's a bid to reach the younger voters. Fresh from his conviction in the first criminal trial of a former US president, Trump made his debut on the app with a 13-second clip alongside the Ultimate Fighting Championship CEO Dana White.
Well, David Ellison has sweetened his offer for Paramount. Ellison's offer is said to include an option for non-voting shareholders to cash out a portion of their stock. It would be for about $15 a share. Now the decision to approve the deal, as it has been, is largely in the hands of Sherry Redstone, the chair of Paramount's board.
The latest Caixin survey shows China's manufacturing activity expanded at the fastest pace in almost 2 years in May. The upbeat results contradict the official data that showed factory activity unexpectedly contracted last month.
All right, coming up on the show, the chip giants are buckling down. NVIDIA and AMD both announced their plans for AI. The competition's heating up, Manis.
Yeah, we'll bring in a couple of lines from that. Danny likes them. Later this hour, Aramco sellout stock offer, returning production from OPEC Plus with Rapid Energy founder Bob McNally. Context matters on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Laptop, your future PC will become an AI. They'll be constantly helping you, assisting you in the background. The PC will also run applications that are enhanced by AI. And your PC will also host applications with digital humans that are AIs.
Well, chips are getting a boost this morning, kicking off the week, both for NVIDIA and AMD, unveiling their plans for chip upgrades. You're right. After the results, you get an upgrade plan. Tom McKenzie is with us this morning. I mean, there's some cracking lines in this announcement. I won't take them all away from Danny. I'll go for the really boring line, which is 98% cost savings and 97% less energy.
Oh, you're good.
I leave the lovely line for her. You see?
Shares.
We share. But here's the thing. It's just the speed with which they introduce new product.
It is, and I had this image of Manus Cranny standing outside the Apple store with his tent to get the latest product, what, 10 years ago? I feel like this is possibly what's happening in the world of AI and these chips, because this is a reminder that this is a CEO, Jensen Huang, who is absolutely determined not to be sitting on his laurels, given and despite the fact that they have this massive moat versus their competitors. This is a CEO who is continuing to drive that innovation, and this is what the message, at least, he's trying to push. And he's had that again, and he's pushed that message again, describing this as an industrial revolution. Now, updating in terms of the product cycle, and that's what's really clear and really key, is this annual product cycle that they're now aiming for. So the Blackwell Ultra, he has flagged for 2025, and then a new platform for which we got few details, Rubin is what it's being called, for 2026. He also updated on additional measures around tools that they're pushing out right now and additional measures around software. Because again, this is a hardware, but also a software and services business now. And again, it's just that reiterating the annual product cycle, that was key. And just the fact this is an executive in the team who want to at least push the message that they continue to innovate at pace.
Well, one of the quotes I want to talk about was just shown while you were talking, Tom. The more you buy, the more you save. That is CEO math. It is not accurate, but is correct. Is that a play on girl math? I don't know if we think Jensen Huang knows the internet means.
I've got nothing to say about. I just wanted to be made very clear. I've got nothing to say about girl math.
Manus isn't online enough to know about girl math.
It's like men opening fridge doors.
I'm not sure what that one is, but okay. So Tom, here you have Jensen Huang saying, look, everybody needs to spend on AI. Everyone needs a plan. It's CEO math. You got to spend. That's the way to save money, which is counterintuitive. But AMD also comes out with their plans for upgrades to eat into some of NVIDIA's market share. Is this still NVIDIA's world, or does it have some real competition?
Yeah, we are still living in NVIDIA's world, but that's not to take away from the fact that AMD is putting real effort, putting real money into trying to close the gap. The gap is still huge. Look, NVIDIA have about 80% market share. They have annual sales of about $100 billion US. NVIDIA, just for the AI chips, is targeting sales of around $4 billion, so 4 to 100 billion. There's the CEO maths for you. But they are innovating as well. They came out with a new chip that they say on many measures and metrics matches what you're seeing from their key competitors. NVIDIA, of course, case in point. MI325X, that's one for Manus in terms of the name of this chip. That was unveiled by AMD. You can add that to all the other stats he's got on the back of his head on this story. And they are also pushing this annual cycle, tech cycle, or at least innovation cycle. That's interesting as well. Look, the gap is still huge. AMD are playing catch up. The moat is enormous, but they are now a significant player as well. They're not matching NVIDIA at this point. But look, they're coming out with these new chips, the upgrade cycle, and they're taking this very seriously indeed. What Jensen Huang was also saying, interestingly, and AMD will be taking a line from this, is pushing AI now into the retail level, the laptop that you buy, but also at the business and corporate level, everyone from shipbuilders to drug makers, he name-checked those sectors in terms of embedding this AI at point.
Tom McKenzie on CEO Math.
He's on fire this morning, isn't he? He's
He
on
really
fire.
is.
Yeah.
Tom, thanks so much for joining us. Tom McKenzie. Okay, from CEO math to IPO math, Saudi Arabia's top executives are heading to London and the U.S. are trying to drum up demand for the $12 billion share sale 5 years after it scrapped an international roadshow for its IPO. Let's get to Bloomberg's Horizons anchor Jumana Bersetchi in Riyadh. So Jumana, are they going to strike gold this time around with the foreign funds?
Good morning, guys. Well, it certainly appears to be the case. The books officially launched yesterday, off to a flying start. Within hours, they were already oversubscribed. They're obviously looking to raise $12 billion. The book building process is going to continue throughout the course of this week, but you've got to think that the orders that came through yesterday were mostly regional. It was Sunday, after all. Many of the international community were not in for trading. And so the big focus this week is what can be done to attract the international community. You'll remember back in 2019, the inaugural IPO in December 2019 raised $30 billion, but only 23% of that came from the foreign international community. And so what they're doing this time around, according to our own reporting, Matthew Martin put out a note this morning saying that they're actually engaging in a roadshow to appeal to some of those international investors. And key there is Aramco's dividend. They pay a very high dividend yield compared to some of the other oil stocks in the sector. And then you also want to bear in mind that this time around, there is a lot more visibility vis-a-vis those dividend payments and vis-a-vis the cash flows as well. You're looking at a market cap of around $1.8 trillion. The big question, though, is when it prices at the end of this week, how much of that book is coming from the international community?
Yeah, it's going to be interesting to see what they manage to do in London and here in the US in terms of that rallying call. Look, the other critical event, you were there to cover part of this, is the OPEC Plus meeting. It's an interesting political nuance that it shifted from Vienna to Riyadh. The Emiratis were there, the Russians were there. It's the OPEC Plus deal. What did they strike on?
Well, as you know better than anyone else, Manas, a lot of intrigue going into this meeting, a lot of last-minute logistics changes, and I think people were surprised to hear that some members of OPEC Plus were actually coming physically to Riyadh. And it later emerged that the reason they were here is because they were part of the 8 members of OPEC who had participated in that voluntary cut, the 2.2 million barrels per day output production curbs that were introduced in November 2023. And so what came out of OPEC Plus yesterday, 2 major announcements. The first is that the group-wide production targets are going to stay the same until the end of 2025. One small exception there, a little bit of a win for the UAE. They managed to carve out 300,000 barrels per day extra production for themselves in 2025. So big win there. But then on the voluntary curbs, the initial reaction to the market was a bit of a surprise because we saw that they were extended only by 3 months, after which there's going to be a gradual phasing out of those curbs, i.e. more oil is going to be supplied back into the market by Q4 of this year. And what OPEC are trying to do here is continue to support prices, but at the same time manage some of the member states who are pushing for higher market shares. So it'll be interesting to see how this evolves over the course of the summer. Demand and the Fed in focus.
Jumana, thank you so much. We'll track the oil price through the week. Jumana Bersetchi there. Context Matters on Bloomberg.
names in tech are on Bloomberg.
There is a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show. This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
Let's get you some front page news. Look at what's making headlines around the world. We have a lot of political things to cover, a lot of presidential races on the New York Times. They lead with the story of Claudia Sheinbaum making history, the first woman and Jewish person to lead Mexico. It was largely seen as a referendum on AMLO. She's the continuity candidate, but she also now faces higher crime and a fiscal deficit that's ballooned.
And then the FT leads with the Indian markets. They're hitting record highs again on the back of politics. Modi, Prime Minister Modi, his third term promises to be more economic growth and market-friendly reforms. But we've got to recap this again. I mentioned it at the top of the show, of course. It is GameStop. It was up, 90% when we walked in, and the market opened at 4 a.m. So this is all to do with Roaring Kitty coming back to life, and of course, a Reddit post, which for the first time in 3 years, we can't name the Reddit post, but it's barnstorming, isn't it? Look at it, 67% at the moment on GameStop.
Yeah, he just posts that he owns GameStop and this weird reverse
symbol.
Uno card tweet. You know, I can't help but wonder if Keith Gill is just like, hey, you know what, I want to buy some stuff. Maybe I'll just post my GameStop holdings. This man can make money so easily, it's remarkable.
When you own the community, and the community on Reddit or whatever pays so much homage to you. By the way, AMC got a kicker as well, up 33%. So we'll keep an eye on those old meme stocks. Go on, Keith.
Look at the number of women that want to learn the game, young girls that are joining on the tee. Really an exciting time for all of us to really capitalize on this moment. When you look at women who are making most of the purchasing decisions in households, whether that's cars or that is home or financial services, and who are going to drive the wealth of the future, it's women.
Obviously, we have our car business and we need to have games here and all that sort of thing. But what else can we do? How do we grow the platform? the whole ticket pricing process. It used to be very yellow sheet of paper, maybe some numbers around it. There was not a lot of science behind it. We're now in the world and have been for many years, as most other similar businesses are, into dynamic pricing. So our pricing for a seat may change hourly if we see demand for that, all driven to maximize revenues.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
The AI race heats up. NVIDIA unveils plans for annual chip upgrades, while AMD speeds up the launch of its new processors. Sold out. Aramco's $12 billion stock offer sells out in hours. Executives gearing up to gather foreign demand this week. And we're live to Dubai at the annual IATA meeting. We'll bring you our exclusive interview with the Virgin Atlantic CEO, Shai Weiss.
What did you call Friday, Manus? I love that. You said it was like a Black Friday shopping spree.
It was like the last 20 minutes in a Black Friday sale. Click, 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 click.
But it's exactly what we had, right? It was a sell-off Friday, and all of a sudden at the end, a remarkable recovery that we end up 0.8%. It wasn't GameStop. That's today's story. That's why we're rallying in the meme stocks with Keith Gill coming back. But S&P futures up 0.2%. Your U.S. 10-year yield, that comes down nearly another, let's call it 2 basis points. We're under 4.5%. The soft landing trade is in after stable PCE reignited that trade. The front end also falling well below 5%. And we're going to get into this, Manus, so I'm not going to steal all of Bob McNally's thunder. But Brent crude, little change this morning, up 0.2%. It is the voluntary OPEC cuts, and the supply reductions rather gets rolled back into October.
And it is quite a nuanced change between the sort of the major commitments for cuts and perhaps the scale of rollback. And also the Emiratis got a little bit of an extra kicker in terms of their production. Depends which research you read. We've got RBC in the house, we've got Goldman Sachs in the house, but then of course we have our very own Bob McNally to talk to. Oil is steady this morning. OPEC Plus delivering what I'd call a two-tiered solution or proposition for the market. Extending the group-wide cuts to 2025, but it also laid out a framework to bring barrels back later this year. What can we make of the deal? Rapidan Energy's Bob McNally puts it to the market like this. OPEC Plus clarifies, soothes, and signals lower production for longer, soggy demand readings, and wilting spreads and cracks, and rising speculative shorts induced OPEC Plus to extend. Bob is with us now. Bob, good morning to you. We have this near-term extension in the oil cuts through to the end of the third quarter, and then a slow add back. I want to understand the scale and the cadence of the add back and the impact. Good morning.
Good morning, Manus and Danny. Great to be with you. Yeah, look, the main takeaway here is that OPEC Plus realize fundamentals are not firming as fast as they had expected, and they need to be lower for longer. So let's just break it down. First of all, you had 2 million barrels a day of collective wide cuts due to expire at the end of 2024. They said, nope, that's going into 2025. Then you had 1.7 of voluntary cuts among 9 producers, also due to expire end of 24. They said, nope, we're going into the end of 2025. Message, OPEC Plus is going to be on the job well into next year. Okay, they didn't wait till December to do that. They did it now. Then you've got the real game. The real game in town is the 2.2 million barrels a day of voluntary group of 8 cuts, featuring the Saudi 1 million barrel a day lollipop. Now that one, they said, look, that was due to expire at the end of June. we're going to the end of September. And then in order to provide more clarity, they said, look, when this thing ends, we're going to gradually taper out of it at the pace of about 180 to 215,000 barrels a day, gradually. Now, the bears said, oh, no, they're saying they're going to dump oil on the market. Well, wait a minute. They also said we can cancel, delay, reverse this tapering at any time. So net, I'm not surprised to see the oil market hasn't moved around much. They provided clarity. They said, we know we have to be in this game for longer. And they took care of some big decisions that we otherwise would have waited to until December 4th.
Well, Bob, I wouldn't be doing my journalistic duty unless I, gave a word to the bears, some fair imbalance. Goldman Sachs is one of them, basically saying that rollback, that October 1, that once that very detailed plan is in place, even if OPEC, to your point, is saying that they can undo it, that'll be very hard to do. They say it makes it harder to maintain low production if the market turns out softer than their bullish expectations. Why are they wrong, Bob?
They're wrong because the OPEC Plus and this group of 8 and Saudi Arabia have demonstrated over and over again, if they have to adjust, they will. So if we get into August and September and we have another disappointing quarter of no inventory draws, if macro is weaker, et cetera, I don't think it's a problem at all for the Saudis, the UAE, and their other 6 partners to say, we're going to push back this tapering. I don't think it's a hard lift procedurally, politically, or anything else.
So you've taken a lump out of Goldman Sachs. Good man. Monday morning. Now Goldman's, they're just wrong. What about Javier Blas? Let's have a pitch back at Javier Blas. Javier Blas reckons that OPEC Plus, he's now an opinion columnist at Bloomberg, not a reporter, and he says they're throwing in the towel on $100 oil. Have they?
Javier and I have a friendly disagreement on whether the Saudis target an oil price. I respect him enormously. And in my experience and from my conversations, they do not. They tried that in the 1980s, and it turned out to be disastrous. And they still remember that very well. They often talk about that. I think they're after 3 things: stability, stability, and stability. They don't want big stock builds. They don't want big stock draws. They can't really choose the price they want. I think they have to sort of aim at stability. So I think I'm not sure how hard they were on $100, but I respect Javier enormously.
What about this IMF study that basically said that prices need to be close to $100 a barrel for MBS to fund some of the plans he wants to do? Is that not in the back of the Saudis' minds?
No, every time I see a report that this price is needed for the budget or that price, don't folks realize revenue is a function of price and quantity? If the Saudis wanted to drive oil to $100, they probably have to drive their production down further, reducing their revenues. So it really depends on whether OPEC or Saudi Arabia has pricing power. So no, I don't think they associate a given price with a revenue target, because the question is, what does our output need to be to get to that price?
Well, the pricing power is contingent, presumably, on the demand factor in China. We'll come to that in a moment. We need to squeeze another couple out of you. I want to talk to you about price. You say stability, stability, stability is the objective, and they're not targeting price. Well, then, where is, and I would call it a comfort corridor on the floor? Where is the bandwidth that they are comfortable with on the downside, which would prevent them having to scale back the rollback?
I think there's probably a comfort level right now in the $80 a barrel range, the $80, $90 a barrel range. The main thing they're worried about is the thing we're all worried about, is macro. I mean, we're all Fed watchers now. Everything's being driven by the central banks, the macro headwinds. So I think they're very happy with $80, $90, given the enormous uncertainties, both macro and then geopolitical in the world, Manus.
While we're talking about the desire for stability, what do you make of them doing a remote meeting, but really a Saudi meeting where people went to Riyadh instead of the spectacle, instead of the circus of Vienna, which, let's be honest, doesn't exactly promote stability?
It's a big group, 22 members. Some of those ministers really look forward to getting out of their countries and traveling and being in person. So I think there's that. Now, on the other hand, this meeting turned out to be a lot bigger than we all expected, right? They took decisions this weekend on UAE's production capacity, on extending the cuts that we all thought they were going to take in December. So not too much of a surprise, given the enormity, the portentousness of these decisions, that they wanted to be in person, at least some of them. It shows a flexibility, procedurally.
Was it a policy of appeasement to give the Emiratis 300,000 extra barrels of production next year, or just good governance?
I wouldn't call it appeasement. It's, look, the Emiratis have increased their production capacity. They're going from 4 million barrels a day in 23 to 5 million barrels a day in 2027, and they're hitting it faster, right? They went up from 4.6 to 4.8 this year. So the UAE has been holding a larger share of its production capacity in spare. It's been carrying a bigger burden. This is more like giving UAE, I think, its due share, given its enormous increase in its production capacity.
I'll probably get in trouble for having said, was it a policy of appeasement? But hey, what the heck? Tell me this, the IPO roadshow is on the way. You're an American, you've been advisor at the White House. How much will the foreign buyers take of Aramco at the moment? Is the market in good form to pick up Aramco?
I think so, Manus. You know what? The sale is coinciding with a shift. And I was just in Japan, too. It's amazing. The world is shifting from rapid decarbonization, peak oil demand is around the corner, to geopolitical risks, stronger demand, slower EVs. And I think and you see this with the consolidation in the United States as well, with the oil companies. You're starting to sense that demand is not about to peak. We're structurally tight toward the rest of this decade. Therefore, sales like these, consolidations, people are looking to grab hydrocarbons before they take off.
Oh my God, how crowded was Japan and Tokyo, Bob?
Manus,
everyone's going there.
I've not
Are we the only ones?
You've been.
Yeah, like 2 years ago, but now everyone's going. Bob went, we're missing out. We got to take the show on the road to Japan, obviously, at GPN. Bob, thank you so much for joining us this morning. Rapid and Energy founder, Bob McNally. Okay, coming up, we have our exclusive interview with the Virgin Atlantic CEO, Shai Weiss. That's up next on Bloomberg Brief.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We're looking at a very strong summer, also a very strong winter. Come to that, we've had a very good year. 23-24. We finished that in March, and we're ahead of where we were this time last year. So demand remains very strong in all the segments.
That was the Emirates airline president Tim Clark speaking with Bloomberg's Guy Johnson. Guy has been on the ground in Dubai at the IATA meeting. He's there now. Let's get over to him, who has another top voice in the aviation industry. Guy.
Hey, Danny, thanks very much indeed. Yeah, I'm joined by Shai Weiss. He is the CEO of Virgin Atlantic. Virgin Atlantic, this year, celebrating 40 years in business. Shai, great to see you.
Nice to be here.
So, 40 years, what's next?
Another 40 years, first of all. So, it's delightful to celebrate our 40th anniversary. June 22nd, 1984, a flight from Gatwick into Newark Airport. And, the thing that sets us apart has always been the red thread, our people, the magic that we make happen every single flight. Yeah, so we're delighted to be here. In the future, well, the future is bright. We have a very clear mission to be the most loved travel company and become sustainably profitable. And we're very much on course to achieving that.
Okay, we'll pick apart the profitability story in just a moment. So in terms of new routes, in terms of what you're doing with the airline this year, what are the plans?
Yeah, so today we're announcing actually 3 new partnerships. We're now announcing a co-chair with El Al and 2 of our SkyTeam partners, Saudia and SAS. And we're also announcing that we're returning to Tel Aviv on September the 5th. So, increasing connectivity to our partners in SkyTeam and providing our customers with more choice and actually people coming into London and flying beyond.
How easy was it to make the decision to return to Tel Aviv?
We were the last carrier to actually fly into Tel Aviv out of the UK. So the decision was made a few months ago. I think September is the right time to do it. It's all about first of all, demand, but of course the feeling that our people should be comfortable flying there because our people stay overnight in Tel Aviv. And we want them to be comfortable doing their jobs, and I think September is the right time for that.
This isn't based on progress of the peace deal. This isn't based on what is happening with the geopolitical story. It is just based on a demand story and the certainty that you have that your people will be safe.
Yes, and of course, the Delta is flying this week to Tel Aviv. I think United is coming after them. So I think there is a sense that the carriers are seeing that things have stabilized, and of course with Biden's announcement, and hopefully the parties can find a way to accept his proposal and get much-needed stability and peace for everyone in the Middle East.
Interesting that you've got, almost on the same piece of paper, a co-chair with Saudia and a return to Israel.
Yes, and the beautiful thing about it is we've added SAS, so kind of our Scandinavians in the middle, to show that Virgin Atlantic, of course, does business with everyone. Wherever there is demand, and it's our partners, we are happy to provide it. But it's a 3-way announcement today. We could have done it individually, but actually all these conversations started a year ago here in IATA. It's nice to see progress a year on.
Let's talk about politics. British election coming up, and it looks as if we're going to see a change in government. What do you want to see from that next administration in 10 Downing Street? It looks like it's going to be the Labour Party. That's what the polling is suggesting at the moment. What's the message? What does the aviation sector, what does Virgin Atlantic need to see from that next government?
I think we've been very, very clear, and it's really not about who wins the elections. It's about a new sense of pride in aviation in the United Kingdom. There's some amazing companies in the United Kingdom, but I think, the need to tax aviation companies with very thin margins, the fact that there is a lot of policies in sustainability, and the fact that we don't recognize that as an island nation, we really need a thriving aviation industry. So what I'm looking for from the government is leadership and understanding that aviation is the friend of the UK public and the friend of government. We need it for trade, for, of course, connecting families and loved ones, for tourism, and a strong aviation, a strong Virgin Atlantic can only be achieved if there is support for that from government.
One of the key things that obviously you've been talking about a lot over the last few years has been what has been happening at Heathrow. British Airways has been having the same conversation. Yes. There's a sense that maybe the customers, i.e. the airlines, have not been getting a fair crack of the whip in terms of the money that is having to be paid in order to make that airport work. Yeah. Now, there's been some changes. Did the changes go far enough? What do you want to? Would you like to see? Would you suggest to the next government that we see changes at Heathrow?
Well, first of all, it's a very opportune time. We have a new leadership at Heathrow. We have potentially new government coming in and potentially new ownership of Heathrow.
Yep.
There is no doubt in my mind that we need to see change at Heathrow. The service is simply not good enough for the most expensive airport in the world.
Yep.
It's the most busiest airport in Europe. It's the 4th busiest in the world. And when you're here in Dubai and Abu Dhabi and you can see what can be done with fantastic infrastructure, we need to see better on behalf of our customers.
What does that look like? What does that actually, what would you like to see the model being?
I'd like to see a more efficient, a cleaner, of course,
okay,
a
that's
safe.
all fine.
Yes.
But does the current ownership structure work? Would there be a better model that would work?
I think if we had the opportunity to actually participate in an ownership and running of a terminal, we would do a far better job.
Heathrow up into separate terminals.
That's one of the options. There are many
Like
options
JFK.
to consider. But first, let's not forget, Heathrow is a regulated asset base, just like Thames Water.
Yep.
There is a reason why they are regulated, because there is only one true hub in the United Kingdom. It happens to be Heathrow. When you tend to be a dominant player or a monopoly player, you tend to be complacent. And I would think that if there was free competition at Heathrow or more sense of competition at Heathrow, the service the consumers would get would be far improved and airlines could do a better job.
You don't think the Thames Water example is that actually competition doesn't work?
No, what I actually think is that just burdening stuff with debt, not thinking about the consumers at the end of the game, that's where things start to fail. And I think there's different models. Of course, water is not exactly airports,
sure.
But the parallels are clear, and the comment is fair.
You talk about Heathrow, Gatwick. You used to be there.
We used to be there, and
I hear that you'd be welcome back.
That's what I hear, and we always like to be welcome back.
Yep.
It's 40 years for the first flight from Gatwick, and my answer is a very clear one: never say never. There is the historic home of Virgin Atlantic.
Yep.
There are constraints at Heathrow in terms of the ability to grow.
Yep.
Never say never.
Do you think a Trump presidency would make a transatlantic airline's life more difficult?
The good news is I don't have to vote, and neither does anybody in the UK. But we do know that, of course, there is a special relationship between the UK and the US. So whoever wins the elections, I'm sure will recognize the need to establish that.
But it feels like we're heading into a more fragmented world, and the less fragmented world has suited big international airlines. A more fragmented world, in theory, would do the exact opposite. Is that a fair conclusion?
Well, a unified word, I think, in a global world is better for airlines, of course, because airlines are necessary in that type of an environment.
Yeah.
A more isolationist world is not where we play in. There are 1.4 billion people voting this year. Of course, we're just about to finish the Indian elections, US, the UK, and elsewhere. We've just seen Mexico. So I would like to think that the people understand, the people who are voting understand that stability is good, that cooperation is good. It does feel a bit more fragmented, but airlines don't run things for 1 year or two. That we run things into a very long future. Looking ahead, I'm pretty confident that the U.S. will lead the way in creating an environment that is inclusive.
Congratulations on the 40 years, Shai. Great to see you.
Thank you.
Thanks very much indeed for stopping by to see us. Manus, from IATA, here in Dubai.
You're having the best life, aren't you, Guy Johnson there? Great interviews, great content over the past couple of days. Another exclusive interview with Guy Johnson on the ground at IATA. And don't miss another interview with the United CEO, Scott Kirby. That's at 7:30 a.m. Eastern Time. Danny and I, we are checking the Mexican peso. Of course, we're in the midst of a host of elections. India, Mexico. But look at the peso. Again, the concern with Bloomberg have sort of put out their note. Constitutional reforms, the grip of constitutional reforms may indeed be emboldened by Ms. Sheinbaum, and that could weaken the checks on power. That's what Bloomberg are saying. There she is, victorious.
Right, it's because she has a supermajority, so is there a check? I mean, the irony, of course, is that she's largely a continuity candidate from AMLO, which saw huge gains in the peso. Maybe less so about what the president did, maybe more about the strength of the U.S. and Mexico's proximity to it, and at the same time, a central bank who hasn't cut as much as other Latin America central banks.
Yeah, long live the carry trade. It's a great debate. What's it called?
The super peso.
Super peso.
The super peso, that's it.
I was in Mexico earlier this year. It wasn't cheap. Right, we got to go, apparently.
Go to Japan next time.
I'm going to Japan. All roads lead to Japan. Good morning.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. Let's get you set up for your trading week this week. We're going to get USM manufacturing PMI out at 9:45 a.m. Eastern, then manufacturing ISM at 10 a.m. The ECB rate decision, that comes on Thursday. We'll, as always, hear from Madame Lagarde. And we round out the week with U.S. jobs report on Friday. Manus, how are your stocks looking?
Tier 1, Tier 2. We're
feel
talking
bad
about the
saying
data.
that
She's jibing me about the quality of the data. I've got Tier 1 stock for you, NVIDIA. Okay, we're all going to be able to retire on that. Rising, they've got AMD and NVIDIA both updating some of the chips that's available to us. Paramount up 5.5%. Film producer David Ellison's offer for Paramount includes a $15 a share cash out option for non-voting shareholders. And then all hail GameStop. Roaring Kitty came back showing a receipt that Keith Gill had a big position in GameStop, and the stock has just stormed up this morning. We started the day at $7 billion in market cap added. Now we are
just under $6 billion.
Drum roll.
Another bad day for those who believe in the efficient market.
Roaring Kitty, I love you. And AMC had a nice bid to it as well. Go on the meme stocks.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, Zay Poland. He did come to me and Susan O'Malley, and they said, Abe Poland says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team.
His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
So much growth is priced into earnings expectations, and there's so much optimism priced into markets.
I think we're priced perfection on a lot of areas. We're very susceptible to a fast pullback again.
There is sticker shock in prices, and you are seeing the stress in businesses.
The market really has been selling off quite a bit, with technology being the only group that's still in positive territory.
We're still in a bull market, but it's going to be slowing down from here.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started. Let's get your month started. Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance with your equity market positive by 0.1%. Beginning June, hitting the ground running. The calendar is absolutely packed. Going into payrolls on Friday, sneak peek of our survey. The estimate right now, 190K. The last major data point going into the Fed decision next week. Before we get to the Federal Reserve on Thursday, ECB in the mix. Big question about the ECB is not what they do this week. It's what they do next month and the extent of divergence we can achieve between the ECB and the Federal Reserve.
The hotter-than-expected inflation rates over in Europe didn't materially shift this view that it's basically locked in for June. This week, it's basically locked in for a rate cut. But to your point, it's going to be the rhetoric. How unified is the ECB committee saying, yes, we want to hike in July. We want to hike beyond that at a time where inflation is global and it's sticky.
How split is that governing council this coming Thursday? That news conference with President Lagarde, one to watch. Before we get there, we need to talk about the Federal Reserve. The new consensus, we'll talk about this with Cameron Dawson of New Edge a little bit later on this morning. The new consensus is like no cuts in 2024. Front page of Barron's this weekend, no cuts this year.
Which raises the specter of, okay, is that bullish or is that bearish? Have we priced in the greatest amount of economic momentum that can be behind those no-cut scenarios? And are we looking at, if there is a cut, that is going to be negative for risk assets at a time where that signals greater weakness than expected? That was what Michael Hartnett over at Bank of America seems to signify. And frankly, that was the reaction that we got this past week. Last week, we saw weaker than expected, or at least in line, PCE numbers that didn't boost equities materially, and that was a signal.
Can NVIDIA keep doing the heavy lifting? In the pre-market, again, we're up by 3%. We were higher in the month of May by something like 30% on one of the biggest names on the planet, up another 3% in the pre-market this morning.
It's NVIDIA's game, though. We talk about this all the time. They're coming out, we'll talk about this later, about some of their new technology and how they're going to have new iterations every year of their new processor, AMD trying to get in on the game. The problem is this isn't materializing into a broader kind of boom that a lot of people were expecting. And until it does, there is this feeling that we saw last week that there are winners and there are losers, and AI cannot lift all boats, and there is perhaps too much enthusiasm baked into how quickly this can be adopted.
Let's get to the scores this morning. Welcome to the program. Equity futures look a little something like this, positive by 0.1% on the S&P 500. Yields coming in just a couple of basis points on a 10-year here, 447.68. In the FX market, just a slightly weaker euro, Lisa, going into the ECB later this week.
You pointed to it. This is actually a massive week. Last week was rather stagnant when it came to a lot of the economic data. This week, it's going to be the drumbeat to Friday. When it comes to jobs data, we get JOLTS tomorrow. We also get ADP jobs data. You can debate the importance of that on Wednesday. On Thursday, we get initial jobless claims. All that is the jobs related. aspect. But there's other data too, and you talk about manufacturing. Today we get ISM manufacturing, the actual, not the S&P Global read, and this should be very interesting. We'll also get services PMI on Wednesday, and of course it is that ECB jobs decision, ECB rate decision on Thursday that's going to signal how great this divergence can be at a time where people are upgrading their growth expectations for Europe and keeping them the same for the U.S. as maybe the divergence shrinks in a way that's sort of surprising.
I'm with you on the ISMs. The PMIs seem to be whipsawing sentiment one way to the other. I think the ISMs, both manufacturing and services this week, 2 data points to keep in mind and not to be overshadowed by payrolls this coming Friday. Coming up this next 60 minutes or so, we'll catch up with Marvin Lowe of State Street as stocks look to build on the gains of May. Julie Norman of UCL on President Biden's plan for Gaza. And Sonia Martin of DZ Bank with investors expecting the ECB to start the rate-cutting cycle. We begin with our top story. The S&P 500 looking to build on its best month since February. Marvin Lowe of State Street writing this. The momentum that comes off a global rate-cutting cycle remains intact. And as such, we think that risk assets will be supportive. Martin joins us now for more. Marvin, good morning, sir.
Morning.
Why do you think we should be constructive through the remainder of this year, given some of the challenges on the horizon?
Yeah, I mean, for sure, the waters are getting a little bit cloudier. We're getting much more mixed data. That certainly keeps, if you will, discussions of the Fed wanting or needing to hike off the table. That's important. We've taken out probably the biggest risk of the market with the Fed saying, you know what, we really don't think hikes are something that we're going to need to consider. And then you put in all of the cutting that's going to start, beginning with the ECB, moving to the Bank of Canada. Whether or not it's as aggressive as the market expects, the next moves across the biggest monetary authorities are to lower yields. And that is a tailwind.
Let's start with the data stateside. 190 Friday is the estimate in our survey. If we get 190K on payrolls this coming Friday, is that good news or bad news for this equity market?
You know what? I actually think it's probably good news still. It's showing a moderation from that 250 or so that really gets the Fed super concerned. The Fed might look at that as a reason to only signal that they only need to go one more time this year. So we'll see how that parses. We do get one more CPI number. It comes the day that they make the announcement. But if it continues to show some stickiness, we might see the Fed be a bit hesitant, which would be a little bit of a bump. But it still does imply an economy that's chugging along fairly solidly.
It seems like you don't buy into some of the sea change that we're feeling in the market from other people, that essentially there has been a shift where suddenly no rate cuts is being baked in for 2024, but also there is the sense that artificial intelligence cannot save everybody, cannot increase productivity, cannot allow immaculate disinflation to continue forever. And so if you get hotter than expected data, particularly on the jobs front, that is going to equal inflation. Why do you reject that?
You know what? I don't reject it. I think the market is willing to accept that inflation and the data is moving in the right direction so that the next move is going to be a cut. I actually agree with you in the concerns that longer-term inflation is probably mispriced. I don't think that we get to a pre-pandemic world from a funds perspective, from an inflation perspective, which means that we need to start thinking about divergences because other parts of the world do look like they're our star, kind of in the technical sphere of where rates need to be. Gets back to where we were 2015, 2016-ish, and that creates a bit more volatility. But the market's not focused on that at the moment.
Right, and it's difficult to really go long-term when we can't even predict what's going to happen next week.
Sure,
but there is this question right now of, okay, let's say that there is a rate cut suddenly baked into expectations, or let's say the Fed does cut rates. And I want to go to Michael Hartnett's point, this idea that the first rate cut will be a reason to buy bonds and sell stocks. This is completely counterintuitive to where the market was earlier this year, where everyone was saying, buy everything if the Fed cuts rates, because that's going to boost risk assets as well. Do you agree with that? That if there are rate cuts, it will be for the wrong reason, period, full stop?
I think that again, we'll see how the data evolves. I think the rate cut is going to really start the conversation of how deep cuts can be. I expect it to be much more shallow or much less deep, if you will, than what the market's expecting. And then it really puts a spotlight on what parts of the risk paradigm performs better in an inflation environment that isn't necessarily as sanguine as a lot of the forward pricing and expectations are around it.
Is this the right conversation to be having? The extent of the rate cuts we may or may not get over the next 12 months, or is it still, whether we get one or not, from the Federal Reserve?
I think it's the right conversation to have. I do think that we are going to be range bound this summer. Whether it comes from a currency perspective or whether it comes from an interest rate perspective, that's solid for risk just because there's lower volatility and kind of the inputs that go into the global macro discussion. But it also gives us the time to what's the world going to look like a year from now. That's not too far.
Most important Fed speaker of the last week or so is a guy who's not even on the Fed. He used to be. It's Bill Dudley, former New York Fed president, who was speaking in a Bloomberg opinion column in the last week or so and said this: perhaps the Fed's mantra, instead of higher for longer, should be higher indefinitely. Did you read that piece? What did you think of it?
I did, of course. It really does highlight the fact that the Fed is not going to be as effective, not going to be as effective in cutting rates as aggressively as the market thinks. The neutral rate's a lot higher than what a lot of people expect.
So talk to me about leadership in the equity market at the moment. So last month, the usual suspects, NVIDIA, top of the pile, throw in some utilities as well. Where's the leadership going to come from?
I think it's a continuation of that. At this point, it's a bit discouraging that we haven't seen a broadening out of the equity rally. So people are still buying their winners, and it's the easiest and path of least resistance to keep going down those routes.
Do you think the second half will be the revival of the European trade, though? I mean, we're talking about the U.S. in particular, but I do wonder about the divergence, not just in FX, especially as you do see increasing economic prospects for the Euro region, but also, frankly, just on equity valuations as well.
Yeah, you know what? The challenge for the rest of the world is that they don't have NVIDIA on their exchanges. I mean, those are very, very powerful companies. Europe itself is a bit more value-oriented, and that always kind of keeps us a little bit shy from that. I think credit becomes really interesting in Europe because from a spread perspective, there's still a lot more spread compression you could see there than here. And the companies are generally, well capitalized. So, I look at Europe as providing opportunities on not necessarily just the equity world.
Given that, how important is some of the guidance going to be on Thursday from the ECB, not just from a foreign exchange standpoint, but also just an investment thesis, whether you go more aggressively into credit there?
Yeah, for sure. The view that all of these central banks are locked and loaded and they're going to start going in succession is something that probably will be tested. It's not just the ECB in terms of the market's thought around that. I personally think that a lot of the central banks want to avoid a BOJ kind of environment where they get too far ahead of the Fed. If it seems that the Fed is either not going to cut this year or it's going to be questionable even if we get something in the fourth quarter. Given how sticky inflation seems to be, I think that they might hold off a little bit, which creates a little bit more of a challenge for sure.
Marvin, this was great. It's good to see you, buddy. As always, thank you. Marvin Lowe there of State Street, breaking down the week ahead, going into the Federal Reserve. About a week away. Equity futures right now on the S&P 500, positive by 0.1%. Let's get you an update on stories elsewhere. With your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. Mexico has elected its first female president in its history. Claudia Sheinbaum won Sunday's election in a landslide victory, defeating the main opposition party by at least 30 percentage points. She is seen as the continuity candidate from AMLO, who saw the rise of the super peso. However, the currency is weaker versus the dollar this morning by as much as 2.2%. Her and her party's wider victory has led some analysts to worry about the lack of checks on the state's control of the economy. The Fed faces a significant risk of losing its independence to political interference if Donald Trump is elected again. That's according to the latest Bloomberg Markets Live poll survey. 14% of respondents said that they expect Trump to try and demote Fed Chair Powell. Another 44% think that he'll try to weaken Fed's independence and limit its power. On the other side of things, if Biden wins re-election, 54% said that they think he'll leave the Fed alone. Online fast fashion retailer Shein is set to file for an IPO in London as soon as this week. The offering could value the company at $64 billion, that according to a person familiar. Shein's IPO could become one of the UK's biggest ever. Bloomberg News reported in February that Shein was actively looking at London after it decided that it would be unlikely the SEC would approve an IPO for them in New York. And that's your brief, John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. I can't decide if this is a big win for London or if this is really just about China and not wanting to list here in the United States.
To me, this raises a question of how much London and Paris are going to try to capitalize on some of the concerns about the regulatory approvals of Chinese companies here in the U.S. It could be a potential win for them, but you're right. How much is this really about China's appetite?
Yeah, may well be both. More on that story a little bit later on. Up next on the program, putting a deal on the table.
Prime Minister Netanyahu's team, in fact, his foreign minister, again, just said that they welcome this announcement by the president and that they did, in fact, agree that this was their proposal.
That conversation just around the corner, live from New York City this morning. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's Jobs Day, and Bloomberg has the report under surveillance.
We are seeing the labor market come into better balance.
That foundation for the economy is solid.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
This is not a labor market that's slowing down or grinding to a halt.
Which is why everyone is looking at wages.
Payrolls report, 8:30 Eastern Time.
The May Jobs Report, Friday on Bloomberg.
Live from New York City, welcome to the program. Counting it down to Payrolls Friday, just around the corner. Looking forward to that. The estimate in our survey, just south of 200K. Still pretty punchy. Equity futures on the S&P 500 positive to kick off June. We're positive by 0.15% on the S&P. Yields a little bit lower in the bond market. On the 10-year, we're down by 2 basis points. The 10-year yield, 4.4729. Under surveillance this morning, putting a deal on the table.
We have every expectation that if Hamas agrees to the proposal, as was transmitted to them, an Israeli proposal, that Israel would say yes. Prime Minister Netanyahu's team, in fact, his foreign minister, again, just said that they welcome this announcement by the president and that they did, in fact, agree that this was their proposal.
It's the latest this morning. Israel's defense minister telling Secretary of State Antony Blinken that Israel is committed to dismantling Hamas. And over the weekend, Prime Minister Benjamin Netanyahu saying, quote, a permanent ceasefire is a non-starter. Julie Norman of UCL joins us now for more. So, Julie, it begs the question, what exactly is on the table?
Yeah, well, good morning, John. This is a proposal that in some ways has already been discussed in the past, but it's out in the open now. It's a 3-phase proposal starting with a 6-week ceasefire that would see an initial release of most hostages in exchange for many Palestinian prisoners, obviously cessation of hostilities, and also quite crucially, an influx of humanitarian aid. That would be followed by a second phase that would have some kind of agreement negotiations for a permanent ceasefire and the remaining hostages released. And I would say this is the trickiest point, getting to that permanent ceasefire. And then a third phase of reconstruction, which is still somewhat unarticulated. Again, this is the model we've been working for a while.
Julie, do you think this proposal was just for domestic consumption here in the United States, or was it to really put pressure on Israel to play out this story publicly?
You know, John, it's a great question because I think it's easy to look at this move from Biden. He's in this tough spot on this issue as well as many others. There's a tick down to the election, and to see this just as a political move. I think there might be some merit to that, but in reality, this is the administration really just having a last-ditch effort to revive these ceasefire talks that just keep stalling. You know, usually these talks are intentionally behind closed doors. You don't want the public pressure from politicians or from the public. And this time we see the administration just saying, taking a very different tack and turning that on its head and saying, look, we're going to show the world what is on the table, let regional pressure, domestic pressure, international pressure try and push this forward.
In the meantime, Julie, a lot of questions around Netanyahu's response at a time where some people, including the Biden administration, are saying his response was for domestic consumption and that he's facing a lot of internal pressure from the leading party that backs him in Israel. Do you buy that, or do you think that basically it is a non-starter and this is basically a way for Biden to say, we tried, wash their hands of it, and then try to move on?
I think it's a little bit of both, Lisa. We're used to Netanyahu sort of speaking out of both sides of his mouth when it comes to these discussions around the war. You know, trying on the one hand to nod to some of the Biden administration's wishes and suggestions, but at the same time dealing with the reality of the far-right elements of his cabinet that could essentially just, knock down the government. And so that has been ongoing. I would say for Netanyahu, though, finishing this war on Israel's terms in terms of depleting the capacity of Hamas has been clearly articulated by him from the beginning. I don't think he's going to give that up. And I would note also that, many Israelis are behind this. This is not just Netanyahu. We see about 80% of most Israelis supporting the war, even thinking it should be going further. So I would say he's dealing with public opinion, his cabinet, but also what he sees as increasing pressure from the United States and trying to navigate between all of these different pieces.
Julie, I'm trying to understand how much this conflict really is reshaping some of the ties that the U.S. has with other nations, particularly when it comes to other conflicts as well. We've seen certain European nations condemn Israel. We've seen a number of nations pull away from the United States. We've seen some pretty heated rhetoric in the Middle East. Have you seen any increasing true fissures between the U.S. and its allies over this that's lasting and could potentially have crossover to other conflicts?
Yeah, what I would say is that I think it's somewhat underappreciated how much of a hit the U.S.'s image has taken overseas regarding the stance on the Gaza war, really since the start of it. That's definitely true in the region, and I would say it's true across much of the global south, and it's certainly being exploited, so to speak, by the U.S.'s adversaries, Russia, China, et cetera. I would say in Europe, it's a bit more of a balancing act. As in many places, I think many civilians, many young people, et cetera, are watching this closely, but we still see many governments trying to balance between what they see as concern for Gaza and keeping up their relationships with the United States.
I ask this because there was this meeting in Singapore with a number of foreign defense leaders within a lot of global nations, including the U.S. and China. And it seemed like there was an appeal going on, basically, for moral leadership and this idea of who could offer more to some of the nations in the region to generate some sort of coalition. And I'm just wondering how much the U.S. image has been dampened, or what sort of the lines are that are being drawn, whether it's just purely economic or whether there is a sort of, leadership at another level that's coming through on these.
Yeah, I would agree. I think much of the world is saying who can actually move this forward. And I do think this ceasefire bid by Biden, so to speak, was one response to that. I will note also that part of the Biden administration's approach to all this has been very strong regional diplomacy and really getting most countries in the region on board with long-term visions of a normalization deal between Saudi and Israel, a two-state kind of plan moving forward. And that has buy-in from more countries in the region than we've ever seen before. So I would say on that governmental, more elite level, the U.S. has been doing the work, even if they're losing ground among popular opinion.
Judy, do we have a sense of how things might change if we get a change in the White House in the next 12 months?
Oh, I think they would change massively. I think we're all aware of that. On the Middle East, I think there's some who think it's just more of a difference between substance and style on Trump and Biden. They see both as being very supportive of Israel, what have you. In reality, policy-wise, they're very different also. The type of diplomatic engagement we see from the Biden administration is much more intense around the region than I think it would be under Trump, as is this push for some sort of resolution to the conflict. And I think many actors in the region are well aware of that, including Netanyahu and including Israel.
Interesting. Judy, thank you. Judy Norman there of UCL on the current situation in the Middle East and the prospect of change in the next 12 months or so. On the conviction of the last week or so, the polls are starting to come out. This from Morning Consult. We'll talk about this in detail a little bit later on this morning. Over half of voters, 54%, approve of the historic decision to convict the former president last week. Lisa, this line stood out too. The Friday survey showed that just 15%, 1/5, of Republican voters nationwide want Trump to drop his White House bid, which tells you the support on the one side of the aisle is still very strong.
Yeah, I mean, another way to sort of split the hairs here is that 96% of Democrats say that the guilty verdict was the right one. So did 56% of independents. 8 in 10 Republicans, to your point, say that it was the right, that basically it was the wrong verdict, it was a bad trial, and he should move forward. The split, the fissures are not getting closer together. And this trial did nothing to really push the actual sort of believers one way or another. The question is now, to me, actually moving forward, what does this do in putting sort of the legal system in the crosshairs of the discussion and trying to sort of, you know, cast it with one light or another? And that, I think, is potentially problematic.
Terry Haynes of Pangaea is going to be joining us very shortly on the politics in the next hour, so look out for that conversation. Coming up in just a second, we'll catch up with Bloomberg's Ender Curran, with manufacturing in China gaining at its fastest pace in about 2 years. Compare and contrast that to the official manufacturing data we got last week, and we got a bit of a different picture, didn't we?
Yeah, you know, honestly, first of all, I think manufacturing is sort of a red herring anyway, because they're juicing it, and we know that. That's part of the whole issue, is that they're juicing manufacturing to try to create cheap exports to put to the rest of the world. A lot of people saying, well, this isn't actually stimulating growth. So official numbers versus some of the other numbers, what's actually getting out there. To me, the issue is just ultimately how sustainable is this? And what happens if China isn't able to sell those cheap goods? Are these just going to be basically building houses to nowhere, bridges to nowhere, entire cities that are empty? And really, this is one of the sort of angst that people have about what China is doing and how it's going to percolate into the global economy.
Cheap EVs just piling up abroad because seemingly the walls keep going up in places like the United States. If you are just joining us, welcome to the program. Massive week ahead for you. On Friday, we've got payrolls data. On Thursday, an ECB rate decision. And throughout the week, a sprinkle of important economic data. Equity futures on the S&P 500 positive here by 0.1%. There is a little bit of a lift in this equity market to build on the gains of May as we kick off the month of June. In the bond market, yields coming down just a touch. We're down 2 basis points. Your 10-year, 447.29 from New York. This is Bloomberg.
Connection lost. I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Live from New York, welcome to the program. The scores look like this Monday morning. Good morning to you. Equity futures at the moment positive by 0.1% on the S&P. The Nasdaq up by close to 0.5. The Russell, small caps outperform on the morning at least, up by 0.9, leaving behind May, a decent May, with the S&P closing out the month up close to 5%. The Nasdaq 100 higher by more than 6%. And within the S&P, and we'll talk about utilities a little bit later, the utilities higher. Last month, the best month of the year, up by 8%. We'll figure that out in a moment. Let's turn to the bond market. 2-year, 10-year, 30-year. Very first day of May trading, we kissed 5%, and then we retreated, then we pushed closer to it, then we retreated, and yields are lower this morning by a basis point and down across the curve last month by double digits on 2s and 10s. Your scores this morning, a 2-year, 486.22, on a 10-year, 447.09, with tons of economic data this week. Lisa's been through it already. We'll talk about it more in just a moment. It concludes on Friday with Payrolls Friday just around the corner. Want to finish on foreign exchange? If you switch on the board and get to the euro looks like this at 108.32. That currency pair negative by 0.1%. The dollar had its first monthly drop since December. Some dollar weakness last month. Let's see if we get more of that this month. The big conversation we'll have, the split between the ECB and the Federal Reserve, not over the next month, but over the next 6, 9, 12 months. Under surveillance this morning, a busy week of economic data on deck with the labour market very much in focus. The ADP report on Wednesday, followed by jobless claims, and an ECB rate decision on Thursday. The main event is Friday, Bramo. Payrolls Friday, just around the corner.
What's the potential bigger surprise for markets? We've been talking about this a lot, that it's not necessarily the number itself, it's how markets respond to it. Is there sort of an asymmetry here about an upside surprise not necessarily causing as much of a reaction as a downside surprise in terms of maybe bringing back the specter of some weakness that really seems to be the new fear at a time where suddenly people are pushing back rate cuts for the right reason that can support things where they are?
The Federal Reserve has stated quite clearly that they won't be hiking interest rates. Even the most hawkish on the committee, who is saying, sure, we'll leave it on the table, which speaks to what you're talking about. Is there asymmetric risk, i.e. would this market respond more to a downside surprise than it would be an upside surprise? I'm not so sure anymore, because this market has responded in ways that I would not have been able to anticipate. The move that we saw on the S&P Global PMI just a number of weeks ago. Nvidia is a great example of this. Nvidia comes out, crushes it, stock surges, and equity market does absolutely nothing. I think things are getting a lot more unpredictable in the equity market.
Peter Scheer put it well. There's a lack of liquidity. There are a lot of algo traders, but not necessarily sort of deep pools of capital that are having a lot of conviction one way or another, so it leads to a lot of jumpiness. That said, I think that the way that the move goes is instructive. We think about a downside surprise as maybe being positive in the past, because a downside surprise would mean rate cuts that could potentially support equity valuations. I don't know that that will be true this time. It feels like weakness is not going to be treated well by risk assets, because right now people are worried about some sort of rapid deceleration in growth that is not being priced in anywhere. And that, to me, I think is the bigger issue.
We'll get the guests to try and define what weakness is on Friday. Sub 190, 180, 170, 150.
Fair point.
We'll put them on the spot. Crude at the moment is negative by a third of 1%. Brent crude, $80 and about 86 cents. WTI 76. 70. OPEC Plus laying out a timetable to unwind some oil production cuts. The bloc saying some supply reductions can come to an end starting in October. However, voluntary cuts from key members, including Saudi Arabia and Russia, are expected to continue into next year. So a bit of give and a bit of take over the weekend.
So I always try to go to Halima Croft over at RBC for some insight because I didn't really know what to make of this. Is this bullish? Is this bearish? She said, we do see today's decision as potentially providing a beneficial backdrop for the U.S.-Saudi grand bargain negotiations. That basically this opens up the door to more diplomacy between a White House that's watching the price of oil very carefully, particularly the time frame. Think about October. The desire to keep some stability here. This isn't an OPEC that wants $100 a barrel. This isn't an OPEC that's trying to jawbone prices higher. This is an OPEC that wants stability, and they also want diplomacy, and that I thought was a really interesting takeaway.
Perhaps even an OPEC that can't achieve triple-digit crude, which was the take of Javier Blas of Bloomberg Opinion overnight. More on that story a little bit later. Let's turn to this one. China's manufacturing activity growing at its fastest pace in 2 years. The data boosting sentiment out of the country on top of improving home and vehicle sales. Two of China's biggest cities also seeing a housing market pickup after government measures to lower down payments and fund purchases. Bloomberg's Ender Curran is with us down in DC for more. So Ender, help us out with this. We had one data point over the last week suggest that manufacturing wasn't as great as anticipated. Another one overnight that said it's pretty decent. Which one is it?
Yeah, so two very different takes on China's manufacturing sector. The Caixin PMI reading is a private sector gauge. It looks at smaller companies, mostly export-orientated in different parts of the country than the official gauge, than the companies that the official gauge looks at. The private sector reading, as you mentioned, looking upbeat. There's some seasonal factors behind that, Jonathan, some technical reasons. Underneath the bonnet, some suggestions that companies in the consumer sector are doing okay. But really, the bigger takeaway from the China manufacturing data over the weekend was the official reading that came out on Friday. That speaks to broader swathes of companies. That's still in contractionary territory. That's speaking to the idea that new export orders are coming off the boil a little bit. And I think most people are saying net on net that the takeaway from the China manufacturing data over the weekend is the sector's under pressure. And of course, going forward,